Christopher, you're teasing me. What's the target price? Matt Miller from Berlin wants to know.
You know, there's a mentor of mine used to always say the only target that matters is higher or lower. I think ultimately higher.
Christopher Barone.
CFA level 4.
You love that? Yeah, exactly. Well said, Francine. Christopher Barone, go away. He's with Strategas Partners. Folks, that was brilliant. For those of you in technical analysis, that's what it's about. Coming up on the American economy, possibly she'll give us clearer answers than Barone. Michelle Meyer, Bank of America, with his head of U.S. economics, the state of the American economy, given our political unrest. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Canada's convenience store giant Couche-Tard says it's in talks with French grocer Carrefour. Bloomberg's learned that the owner of the Circle K chain has made an offer that values Carrefour at about $20 billion. That would represent a 29% premium to yesterday's closing price. American Tower will pay $9.4 billion to buy telecom towers in Europe and Latin America. The seller is Spain's Telefonica. American Tower had largely stayed away from Europe, where phone companies are trying to raise money from their infrastructure to cut debt and to pay for 5G rollouts. And that's a Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, Two Sigma co-founder and co-chair David Siegel says he's worried about the negative impact that technology and artificial intelligence can have on the human experience. Well, he spoke exclusively with Sonali Bazak as part of Bloomberg's Next Big Risk series.
I am quite concerned about the impact of the changing nature of work on overall the human experience. Let's call it the human experience.
Well, one of the things that you had said to me before was that you don't believe we're building a world meant for humans. What does that mean?
Well, that's what I mean by the human experience. We are supposed to be building a world that we like. Everything around us is for the purpose of us. We want to have an enjoyable life. We want to live in an environment that we find pleasant. We want to have rewarding careers. We want to have an education that is enlightening. There's all these wonderful things that we can create that will make our lives rewarding and enjoyable. But that will only happen if that's exactly what we're focusing on doing.
it. If you were advising a government official or a technologist here, what are some of the things that could be creating a society that is more meant for humans?
Look, I think it really does have to start with having better metrics for trying to gauge, are we happy with our society? GDP, for example, is often the metric that people focus on. And if GDP is going up, then a lot of people would conclude that we're doing a great job. But I think that GDP is an overly simple measure. It's just one number. Quality of life is not necessarily measured by, in fact, is not exactly correlated with GDP. It's really quite a different story. In addition, GDP isn't measuring, how the rewards are actually divvied up. You might have very inequitable growth. And so, at the very least, I think everyone can agree that as society evolves into something much more influenced by technology, the benefits really have to go to a broad range of people. It can't just go to, a very small minority of the population.
Do you have any suggestions on new ways to start measuring the success of our society?
Well, it turns out that how society is doing, just like how a business is doing, is very hard to capture in one number. Ultimately, there are a lot of different things that you would actually need to measure to get a picture, a snapshot of how we're doing. Things concerning health, things concerning even, a lot of people don't like to become so touchy-feely, but just measurements of happiness and satisfaction. We need to also measure how much, how fairly things are being divided up among people. So the short answer here is that the measurement of the health of a society is a very hard problem. And because it's a hard problem, people have tried to oversimplify it down to one or two numbers, which I think is quite inappropriate.
Futures -1, Dow futures up 2, just a mix of the market right now. In the currency space, I've got dollar stronger as well. Interesting to see the dollar comeback that we've seen over the last number of days. We've got a lot more coming up. Critically, Kevin Cirilli will join us here in moments as well. Also, well, we'll see from there. This is Bloomberg. Good morning.
我开始做直播是在今年年初的时候，主要是去年的话，我们参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓， 那平缓的话，可能做到长期持有；长期持有的话，它可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情，很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
Bloomberg surveillance from London, from New York, an historic day for Washington, America, and the world. Our Kevin Cirilli with us now, our chief senatorial correspondent. Kevin, the festivities today are roughly 9 a.m. to sometime a vote in the afternoon as well. And then they pass the baton to Senator McConnell. Explain the decision tree the present majority leader and the future majority leader, Schumer of New York, have. What's their choice set at 6 p.m. tonight?
Well, there was a remarkable development in the New York Times last evening in which Senate Majority Leader Mitch McConnell reportedly is now in favor of the impeachment process because it would allow for, should President Trump be convicted, it would not allow for President Trump to run again for president in 2024. I was really struck yesterday by the development of Liz Cheney, a congresswoman from Wyoming, who came out in a blistering statement and said that she was, in fact, in favor of impeachment and that she will be voting to impeach. Okay. She is, of course...
We're really constrained. Yeah, I know. She's huge, Kevin. We're really constrained on time, unfortunately, Kevin. I need to ask you the likelihood that Senator McConnell or Senator Schumer can find 17 senatorial GOP votes. Is that in the realm of Cirilli possibility?
It's a possibility. It's a great question. It's where we're all directing our reporting. There will at least be a handful of Republicans, but that 17 is the crucial number. You're absolutely correct. It is a possibility.
Kevin, what is exactly, Senate Majority Leader Mitch McConnell's state of mind right now? He would vote for impeachment, or he's against the Democrats putting it forward?
It's unknown whether or not what his particular position is, but I can tell you that Leader McConnell knows exactly what he's doing in terms of the timetable, and the vote in the Senate, and it is still likely not going to happen until next week. And I can tell you that based upon public reports, President-elect Joe Biden has now been questioning about to make sure that once he is sworn into office, that the confirmation processes for his cabinet are still occurring, and that takes precedence, or is just as important, so that he can begin his ability to govern.
But so, Kevin, if Mitch McConnell doesn't actually recall Senate, what's his resolve for the impeachment process?
So based upon now the movement of the consensus is that there could be a trial after a new president is sworn into office. In terms of the timetable, the Senate is not going to be convening until next Tuesday, less than a week from today, in 6 days. And the Democrats have called on Leader McConnell to change that timetable.
Kevin Cirilli, we must go. Too short this morning. Our chief Washington correspondent, ready for an exhausting day. I should point also his sound on Bloomberg Radio. It's an extraordinary set of conversations to begin the Washington evening nationwide. Bob Michael, J.P. Morgan at 9 a.m. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. It was a joy to speak to Glenn Hubbard of Columbia yesterday, looking for stimulus, looking for support, looking for long-term spending by the government to get this nation's economy and our fractured labor force back to steam, back up and running. Claudia Sahm has a different voice, but with the same outcome. She's a Bloomberg Opinion, studying under Shapiro and Kimball at Michigan, where she knows data is king, and she has been out front on a rising $1 trillion of aid that will be needed. Claudia, the rest of the world is catching up with you. Give us a new number. What's your all-in number for stimulus we're going to have to see?
Well, we absolutely need to see more relief in the trillions with an S. I think 2, maybe 3 trillion is where we need to be headed. Now, it absolutely needs to be money that is well spent, right? This is taxpayer dollars. It's a lot of dollars. And so I take that responsibility that Congress has very seriously. But we also have a responsibility to get Americans back to work safely and back on their feet. And we got a long way to go still.
Your University of Michigan is expert, nation leading on the validity, the efficacy of these checks we're sending out. Rubio of Florida wants $2,000 checks to appease the new president of the United States. Are you going to cash your $2,000 check?
Well, I won't be getting one. And I think that's appropriate in the sense there's so much talk, and I am absolutely in favor of the $2,000 checks. They are targeted. High-income individuals do not get these checks. And what I think is so important, in addition to their very popular, need some popular policy now, is that we have a third of U.S. households that have lost income since March and have not gotten targeted aid like jobless benefits. Those checks, given the safety net that we have, are really important to reaching people who have not gotten help. They need help.
Claudia, good morning from London. How much does infrastructure spending help in this kind of scenario?
So I do think we're at a different point in this crisis. When I briefed the House Democrats on March 11th, I said, go big, go broad, go fast. We are many months into this. We know a lot more. The vaccine is coming. I think there's 2 parts of the relief package that need to happen. Immediate aid, especially extending immediate aid that we saw in the December package. And then we do need to start thinking about the building back. Infrastructure is not at the top of my list. I would absolutely put relief like jobless benefits on autopilot. So like with Senator Wyden's plan, because I think that's what we need to strengthen above all. But infrastructure can play a role if it's done well.
So when should we start worrying about deficit? Is that for 2022 or even beyond?
Well, again, I think the point is we need to think about the policies we need to get to full employment, to get the people back to work that want to work. I am very concerned when I see even optimistic Wall Street forecasts saying we're not going to get back the jobs, the 10 million we still have lost, until early 2023. That is absolutely unacceptable. Mm-hmm. So I would focus more on the policies we need, the ones we know will work. And to me, that's a higher priority than some particular number, like capping it can only be $1 trillion. Like that is absolutely the wrong way to do policy right now.
Claudia, the image is the landlords are all out at their summer places deciding whether to slide into the Bentley or the Rolls Royce. You know that's not true. Now, we have some eviction forbearance here and there, the delay of paying rent. How do we delay the agony for the real estate operators who are buried with no rental cash flow?
Right. I think this is one of the underappreciated risks that's facing not just families, but also the business owners, the people that have the mortgages on some of these rental properties. The eviction moratoriums, right now, they're only pushed out till the end of January. Like, we got to deal with that. But I do think this is part of the cleaning up the mess of this crisis. And Congress did not show a lot of aptitude cleaning up the mess of the housing crisis the last time. And I just don't think people are thinking about all of these spillover effects. And this is hard.
How can liberals support the new president?
Appreciating the fact that the road that lies ahead is not only a bumpy one, like we're all going to be disappointed. Like I mean, I'm always disappointed, but I will be disappointed.
Claudia, I've never known you not disappointed.
I'm a macroeconomist, but I do think the road ahead is bumpy, and we need to all recognize there's a lot of uncertainty. And first and foremost, what I want to see is a really strong public health response. It's unconscionable that we still don't have a federal plan how to get us back to a safe place. So that's driving everything. The vaccine rollout is what we absolutely need of all forms of relief and building back better. Like, we got to get that going. That's outside of my lane, but I know that I'm not going to have a sense of where the economy is going until we really get that moving. We're not out of the woods on COVID.
Claudia, how do you bring more people to the table? An overwhelming majority of job losses affected women. How do you balance that out?
Well, again, I think we know what I am most worried about is the women who have dropped out of the labor force. I totally get that. I'm homeschooling my kids too, and it is tough. The longer they stay out of the labor force, we know that that time away from work, the ones that would have jobs to go back to, that hurts careers for a long time. And this goes back to, like, we know so much more about this crisis. We know who's being hardest hit. I think we need broad-based, really popular relief, those checks, but we also have to think hard about what are the issues that are facing. And a lot of it still goes back to, it's got to be safe for kids to go back to school, and women will get back to work.
Claudia, thank you so much. And again, I can't emphasize enough, folks, how Claudia Sahm, more than anyone I know, was out front on the summation of the trillions of dollars expected in aid of whatever form coming out of this natural disaster. Futures -6, Dow futures at -26. With our first word news, here's Ritika Gupta.
Thanks, Tom. It's a historic day on the Capitol Hill. The House will vote today whether to impeach President Trump for a second time. The vote comes a week after a mob of the president's supporters stormed Capitol Hill. Late yesterday, the House voted to demand that Vice President Mike Pence use the 25th Amendment to remove the president from office. That vote was largely symbolic. The vice president had already said that he wouldn't comply. President-elect Joe Biden will seek a deal with Republicans on another round of coronavirus relief. Bloomberg has learned that the approach could mean a smaller initial package that includes some priorities backed by Senate Republican leader Mitch McConnell. And the goal is to avoid trying to ram through a bill without Republican support. Coronavirus deaths in the U.S. are likely to climb by at least another 80,000 in the next 4 weeks. That's according to a new forecast based on models from the CDC. The U.S. is expected to add more than 3,000 deaths a day, bringing the total to more than 459,000 by early February. In London, financiers are keeping the faith that they can win back access to the European Union in the next round of talks. Their industry was left out of the Brexit trade agreement, but in a poll by the consulting firm EY, 76% of bankers said they expect the EU to grant some form of equivalence decisions. That would open the door to more market access. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Thank you so much, Ritika. Now, up next, we continue tracking COVID-19 with Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. We look at vaccine distribution and, of course, the number of people infected and the people on the front line. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, you and I have been speaking quite extensively about, of course, where the price of Brent is going. We're looking at levels. I think it's the longest losing streak that we saw since 2019. Now, the VTOL Chief Executive, Russell Hardy, is speaking to our very own Guy Johnson from the Gulf Intelligence Virtual Forum. You can catch that interview at LiveGo on the Bloomberg terminal. If you listen to what the VTOL Chief Executive has been saying, more oil from OPEC and possibly shale is needed this year. This would support his thinking that actually we're going to see a pretty robust recovery. Let's listen to Guy Johnson's panel.
I'm optimistic here on the trading side than some of our peers, but we believe that by the summer 2019 and latest by the end of 2019, we will be back for most of the products except for jet fuel. So, you know, we see it by the summer, some people see it a bit later, but jet fuel is obviously a different animal. But for the rest, I think we should be back. We hopefully gonna get back, and the vaccine, you know, obviously deployment of the vaccine is gonna be the main driver of that. But we believe we should be back. We should be back to the demand of 2019 by the summer.
Okay, Martin, let's get your take on this.
We don't yet think that we're near to peak oil demand. To be straightforward about it, we still think that that's in the 2030s and possibly in the second half of the 2030s. Obviously, there's still a lot of moving parts, but I think one needs to get back to basics and sort of try and move out of when one starts thinking about the long-term peak oil demand and start looking away from the near-term COVID factors and think about what drives oil demand over the long term. And things like the growth of the global middle class are really big drivers for oil demand, which drives transportation and indeed petrochemical use. And then you have to think about if that trend is still intact, which it is, with a major hiccup, and I think It's been mentioned in some of the earlier panels as well that some countries obviously have been very, very badly affected probably for years by the pandemic, but that trend is still intact. So if it's not going to convert into oil demand, then we need radical technological and societal change, either in the infrastructure or in the behavior patterns. And both of those things are starting to play out, but they're not going yet fast enough. So we track that in our analytics business very carefully. So until we see either the technology or the behavior really changing dramatically for the long term, that oil demand is going to continue to grow, we feel, once it starts to come back.
Well, Christian, let's pick up on that. You are mainly focused on the products markets. You ship that around, and 2020 in some ways was, as you pointed out to me a little bit earlier on, quite a good year. People have not traveled. We've talked about the return of travel, but what that means is
Guy Johnson in London, thank you so much. Right now, we're going to get back on track to the pandemic, and it's really serious, and the extrapolations are not pretty. Lauren Sauer joins us from Johns Hopkins. Lauren, I took a log extrapolation of deaths today in America, and we are in the vicinity of 500,000 deaths in early May of this year, like in X number of weeks when the baseball season's starting and the Baltimore Orioles are in first place. Lauren Sauer, can the vaccinations take us off that logarithmic trend?
I think they can. And I mean, I think the rollout, there's been some challenges with the rollout, but I do think that we're going to see, a nonlinear scale up of vaccinations across the country. The Trump administration just pushed forward a new plan to vaccinate anyone over 65 across the country. So that will change the distribution plans for a lot of states. We'll see increased access to vaccine as well as states start to build things like mass vaccination tents and things like that, similar to what we did with testing. So I think we will see pull away from that potential death rate. I mean, but it's still 4,400 people yesterday died of coronavirus. And so we can't walk away from the physical distancing that we've been doing. We can't walk away from the masking. We still have to have a better understanding of what transmission looks like once you've been vaccinated. So really important to keep those basic measures in place.
Lauren, how is this different in terms of vaccine distribution compared to what we do every year for the flu?
I think one of the biggest challenges is the cold chain storage for particularly for Pfizer, but for both of them that we have now. So we're needing to use new vaccination strategies, and the rollout is to be as efficient as possible. So when we release the flu vaccine, we give people a good amount of time at many different places across the country to be able to get their flu vaccine. They have a large window for when it's available. That sort of slow or tempered rollout allows us to not require massive amounts of storage for frozen vaccine, things like that. So it is a little different. I think that's where we will end up ultimately if we need to do routine coronavirus vaccination. But for now, it's really to get people in as quickly as possible. The other challenge is that we need to monitor people when they first receive the vaccine. So making sure that they don't have any adverse reactions in that 15 to 30 minute window after they've been vaccinated. And that's not something that pharmacies are really set up to do right now.
Lauren, have the number of people that want to get vaccinated increased or decreased?
I think the number of people that want to get vaccinated is probably hovering around the same. I think probably it's increasing some as people who were on the fence about wanting vaccination are seeing people, across the country and across the globe get safely vaccinated. That being said, I think access is going to be critical as we roll it out to beyond that phase 1 group. So beyond the group of healthcare workers and the elderly population, making sure that we have the messaging in place, that we're building that trust with the communities, and that we're still focusing on those healthcare workers and elderly populations that didn't actually get vaccinated in phase 1 for a variety of reasons, whether it was access or fear or mistrust or any of the other reasons that they chose not to get vaccinated.
Lauren, how important is it that you track people coming from abroad? So the fact that international travelers now need to show a negative test result before entering, is that a game changer, or does it just help at the margins?
I mean, testing doesn't really eliminate, all of the risk of people moving the virus globally in international travel. But it does reduce risk, in particular for the passengers that interact with each other in those more confined spaces. So on the airplane, in the airports, in local public transportation, all of those things are that negative test before they get on the plane, risk to those individuals will be reduced. In a country like the United States, where there's significant national spread and ongoing community transmission in almost every state, it's more important to really focus on having people not move around as much, having people not travel if they absolutely don't have to, and not bringing people into the country. Because if you're coming from a country, if you have a negative test and you're coming from a country where there's not a ton of community spread, you're actually at higher risk by coming here.
Thank you so much, Lauren Sauer there of Johns Hopkins University. Now, later today, we continue tracking COVID-19 with Northwell Health Chief Executive Michael Dowling. That's at 12 p.m. in New York, 5 p.m. in London, and this is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We want no violence, never violence. We want absolutely no violence. And on the impeachment, it's really a continuation of the greatest witch hunt in the history of politics. It's ridiculous. It's absolutely ridiculous. This impeachment is causing tremendous anger, and you're doing it, and it's really a terrible thing that they're doing.
President Trump there speaking yesterday from the White House. Now, joining us today is host of Balance of Power on TV and radio, and really the person that spearheads all of our Washington politics efforts. He's David Weston, who joins us now from New York. David, when you look at the week that was, the last 7 days, it seems that everything hanging in the balance is what Mitch McConnell does next. What does he do?
Well, let's go back, and I think you're exactly right, Francine, of course, but the reason why he's so critical is he is the leader of the Republicans in the Senate. It looks like we will have yet another day of history in the United States today when, for the first time ever, a president is impeached for the second time. So it looks like that will happen. The question is, will he be convicted in the Senate? And the reporting yesterday, which I found surprising, at least from people supposedly around Mitch McConnell, is that he actually would favor a trial and a conviction because that would exclude Donald Trump from the Republican Party going forward. It would put an end to it.
David, when does he need to go on the record? If you look at what needs to happen in the Senate, and for the moment the Senate has not been recalled, it's 17 Republican senators that vote for impeachment. That's a huge number.
Yes, it is exactly right, Francine. It's very difficult. Although Mitch McConnell usually both reflects and leads his caucus, his Republican caucus, very effectively. So he normally doesn't go off on a tangent on his own. And the question of timing is very difficult because, first of all, you have the question, if there is the one article of impeachment they're taking up today, if it's voted out, then the question is, when does it get transmitted to the Senate? And some people, including the number 2 Democrat in the House, are saying, hold on to it for 100 days to give President-elect Biden a chance to move forward with the agenda. So it's not clear when it would even get sent to the Senate. And so Mitch McConnell may well have some time to figure out what he wants to do.
David, if the President Donald Trump does get impeached, does he become an even bigger political force because he could be seen by his base as a martyr?
Well, I think that's what you saw him saying in the clip you just played, actually. He certainly is not contrite. He is doubling down, as he always does, and he clearly has a very loyal base there. He did get 74 million votes, and at least some of those people, a large number, I would venture to say, are still very loyal to him, and he will say they are doing something awful to me again. It is what he called the swamp. That's what I came to fight, and that's what we have to keep fighting. So that certainly is a danger, and as you know, Francine, he's amassed over $200 million since the election as a war chest that he can use.
David, how much of voters in the Republican Party are loyal to the party, and how many of them are loyal to Donald Trump no matter what?
Well, that is maybe the biggest question, certainly on the Republican side of the aisle. There was a report out of Axios, which is a political site here in the United States we follow fairly closely, over the weekend that I thought was interesting, suggesting there are now 3 political parties in the United States: the Democrats, the Republicans, and the Trumpians. In fact, there's a fissure we're seeing, perhaps, in the Republican Party, and certainly we're seeing that right now up on Capitol Hill. And the question is, how many people go which way?
David, thank you so much. Host there of Balance of Power on TV and radio. You can catch David Weston on Bloomberg all day. Thank you so much for all the insight, of course, on coming on so early. A little bit later with David Weston, he also tracks COVID-19 with the Northwell Health Chief Executive, Michael Dowling. They'll be talking about people in the front line in the U.S., the vaccination program. That's at 12 p.m. in New York. That's 5 p.m. in London. And this is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
What do you think you would like to do when your term as Secretary of State is completed?
David, I think I've answered all your questions. I may kick this one. I don't know precisely what I'll do.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Of the virus, the pandemic, and the vaccines will really determine the course of the future economy.
We're still living through a demand shock of COVID.
We think the economy has shown fairly good resilience to this third COVID wave.
Now the bottom has really fallen out of low-income spending.
In the last several weeks, the mood has changed dramatically.
You're likely now to see some churn. You may see a pullback in markets.
Last year it was all about hoarding cash, putting it on your balance sheet, make sure you survive. This year, it's more about investment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A simulcast, Bloomberg Radio, Bloomberg Television for Washington, for this nation and around the world, without question, in an historic day in the United States, an impeachment expected of the President of the United States. Lisa, the date calendar on the Cyrillic East Standard Time is they start about 9 a.m., and I think in the vicinity of the afternoon, we may see that event.
Yeah, there's a big question hanging over this impeachment proceeding, which is how does the Republican Party, the party of Trump, define itself without Trump? And that seems to be what's increasingly the theme, as we have Mitch McConnell supposedly saying that he would support impeachment of the president. A pretty big shift right now, Tom.
A big shift, and I really want to point out the distinction of what many of us saw last night. You look at the geography of these Republicans supporting Democrats in the House, and it's fascinating, the diversity of the geography, many of them in very closely contested races. Maybe Liz Cheney of Wyoming, very much a Trump state as well, making her announcement more extraordinary. But we're going to follow all this, and Kevin Cirilli is going to give us a complete brief here in a bit.
Tom, can I just say one thing that's interesting is the party of Trump becoming the party without Trump.
Wait, you mean you're wait. You're going to go, Tom, I don't mean to interrupt, but.
Yeah, but I'm going to interrupt. I'm going to cut you off right there and talk about whether this is going to become the party of collaboration, because one of the most interesting stories out of Washington, D.C. that fell under the radar was Joe Biden working for a consensus, not looking to do some sort of side deal with just Democrats to get a fiscal stimulus through, but to work with Republicans. Is the Republican Party going to become the party of collaboration? And that could really change the entire dynamic in the Beltway going forward with respect to any fiscal support plans. And that might be what's on the table in these proceedings today, Tom.
Greg Valliere publishing moments ago talking about the big or even bigger deal that the president-elect will put together. Claudia Sahm with us, the liberal economist, and she made clear she's still on board a many trillions of stimulus over the arc of this pandemic. The numbers on the pandemic are brutal. Futures -5. I don't want to go into too much data today. I got oil 56.69. John from Capri emails in. It says, Tom, quote, Bitcoin 34,137. Good morning, young Pharaoh. And then on we go to what we've got is, well, currency market not giving me much. Lisa, save me here with the events of the non-impeachment day.
Yeah, the two keen pups now are BitDog and Ethereum Bark. Meanwhile, we are going to get a read on inflation, and I think this is really key as people try to reimagine what it means to have higher prices when you have a money supply that has increased by 25% in the past year. 8:30 a.m. we're going to get U.S. December CPI, those headline inflation figures. We're also going to get real average hourly earnings. 2 p.m. we're going to get the U.S. December budget statement. Just how big is our deficit? I care. Also the Fed's beige book. I care so deeply. I'm going to make this sound really exciting, Tom, because I know how much you and John both follow it. But the idea here is how much are we looking at the deceleration in economic activity in the month of December. 3 p.m. Fed Vice Chair Richard Clarida speaking. I actually think this may be the key event. The big question for the Federal Reserve is to discuss tapering or not to discuss tapering. Clarida could potentially nip that talk in the bud and basically just say, look, we're not going to discuss it. We're not going to taper. Come back to us in 2022, Tom.
On this simulcast today, we'll look at what's going on in Washington. We'll try to look at the markets as well. So much going on. I believe we're going to touch on the pandemic at some point. Those numbers, folks, are just frightening. I extrapolated out the death rate in America, and you get out to 500,000 deaths in early May. The good news is Johns Hopkins experts say the vaccine can come to the rescue and soften that horrific trend. Right now, on the markets and on the application of fixed income, James Karen joins us with Morgan Stanley, Global Fixed Income, head of Global Macro Strategies. Jim Karen, an open question to you right now. Within the sphere of your strategy, which is the item you have most focus on right now?
Well, it's been the potential for interest rates to rise, bond yields to rise, and how high. And the reason that is that it has some very good aspects to it, and it also has some very negative aspects to it. So too much of a good thing might not be so good, meaning that it's good that you get interest rates to rise when you get stronger data, potentially more stimulus, the potential for more growth like what we're seeing right now. But it's bad if rates get too high, and it has deleterious effects on other asset classes like credit spreads widening, equities potentially weakening, and maybe even the dollar getting too strong. It doesn't mean that those other assets, those riskier assets, can't necessarily reset in value, and maybe they should a little bit, and there should be a little bit of a correction. But the point here is that the Fed wants to keep easy financial conditions. The Fed has set out a course to have flexible average inflation targeting. They are inviting higher yields as long as those higher yields are coming alongside better growth and better growth dynamics. But if rates rise too fast, too quickly, well ahead of, say, earnings or cash flows from the real economy, then it creates a slowing effect, and then that can be, not such a good thing.
So are you dismissing this taper talk as premature, and you're really going to count on the Bullard and the Rosengrens of the world to basically say that's not going to be on the table till next year?
Yeah, I think that's right. I mean, I don't think it's on the table until at least next year. But the thing is that there is a self-correcting mechanism that's in the market, and the Fed typically, just like we at Morgan Stanley Investment Management on the fixed income team view it, we view it through the lens of financial conditions. So financial conditions, whenever people talk about that, it's really an index, and that's the way the Fed looks at it. It's a combination of equity prices, BBB, credit spreads, the dollar, interest rates, everything all together in other elements. And the point here is that if rates were to rise too quickly, I think those other assets, whether it's equities or credit spreads or even the dollar, could strengthen to the point where it starts to threaten the economic recovery going forward, and that will turn yields down a bit. Where the Fed has some risk is in inflation. What we don't know is how inflationary this all might actually be, and we really haven't seen a lot of inflation over the past several years. But if it does become inflationary, then that's going to push the rate. That's going to push the rate of change of yields higher very, very quickly, and that can have the negative effects. And that's what we have to be really, really worried about. So I think that's what the Fed really needs to talk about. It's not so much about the level of interest rates or whether they're going to taper or or not right now. It's really about how are they going to respond to inflationary pressures.
And inflationary pressures, which is right where I wanted to go, has been one of the biggest question marks, one of the biggest uncertainties facing markets this year. And I just think about the statistic that the money supply, the amount of money in the U.S. economy is now 25% higher, a quarter higher than it was at the beginning of 2020. I mean, just to talk about the rapid pace of money printing, this isn't bleeding through to the real economy. It's just plugging a gap. What can we take away from that? Is money printing no longer any kind of influence on inflation, or are we going to be in for a rude surprise?
So this becomes very academic in how we think about this, right? So if you're a monetarist and you say, look at money supply is really high, it should create inflation. The monetarists haven't really done so well in terms of predicting that. Yes, it is true that money supply is very, very high, but what we have to remember is that it's money supply times velocity. Velocity is a measure of economic activity. It's M times V that equals inflation. So as long as we have an output gap, which we do, right? We had a bad year in 2020, right? We're probably down 5 percentage points off of trend growth lines. That's potential growth. What it requires is that we grow at least 5% this year and at least 5% next year in order to start to close that output gap. So as long as you have an output gap, which we do, and it's pretty large right now, it's going to be hard for aggregate demand to really overwhelm the supply that's in the economy that would naturally push prices higher. So that's why if we just have a recovery in 2021, that's a failure. We need to have a boom in 2021, and we need to have a boom in 2022. And that's why many people are so optimistic and positive about economic growth going forward. It's because of fiscal stimulus and everything else that's really trying to push. And that's why there's urgency. And I think what the market misses is, why is the Fed so urgent? I mean, things seem like they're okay from an economic perspective, but why is there this urgency? And the Fed feels like they really need to keep conditions really easy for an extended period of time to not just engineer a recovery, but that we actually get a boom to actually close the output gap really quickly and allow those inflationary pressures to start to rise as they're targeting.
Jim Karen, thank you so much. Greatly appreciate it. With Morgan Stanley this morning, I could go on for an hour with Mr. Karen just to get through the clipping of coupons for this year. Futures -5, Dow futures -28 as well. The VIX 23.56. Lisa, on the bond market, my basic question is, how do you define a bear market?
Well, it's not this, and that certainly seems to be the case. Stephen Major of HSBC put out a note this morning, Tom, where he said he reaffirms his call for 10-year Treasury yields to fall to 0.75%. So a Treasury bull at this point, saying the reflation trade's gone too far. He's gotten it right. Interesting to hear that call.
I will say so. And folks, this is something that you look at the dollar market and how that has reversed just in the last week, the zeitgeist of that as well. I mean, I think of the Mark McCormick interview we did, Lisa, and he's an outlier, strong dollar, but even dollar neutrals away from any kind of consensus of 10 days ago.
Yeah, and you see an increasing number of firms, even Morgan Stanley, coming out and saying that they're pushing back a little bit on this consistently weaker call for the dollar in the near term. One thing that Joachim Fels of PIMCO said yesterday that I found so interesting, talking about bond yields, talking about inflation, is that you are seeing inflation in asset prices. You are seeing signs of froth in asset prices. If that comes off, could that cause deflation, not inflation, leading to the uncertainty in this year? I thought that was really interesting.
Well, we'll have to see. Let me do a data check. I'm going to do a complete data check because, well, that's what we do here. But I've got futures -5, Dow futures -29. VIX goes nowhere, 23.55. Yield goes nowhere, 1.1. So how does John Farrell make a boring data check interesting? What a gift.
He talks about Capri. That Euro, man, can do so much in Capri.
Manchester
I can go buy
United.
Some incredible.
Marine went down to the tots. Okay, there we go. 10-year yield, 1.13%. Oil, 56.72. Dollar with some strength. Coming up on Washington, Kevin Cirilli, Mark Howard of BNP Paribas as well. On radio and television, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. The House has voted to demand that Vice President Mike Pence use the 25th Amendment to remove President Trump from office. The vote was largely a symbolic act. That's because hours earlier, Pence told House Speaker Nancy Pelosi that he wouldn't comply. And all this sets the stage for a vote today to impeach the president a second time. It comes a week after a pro-Trump mob stormed the Capitol. The number 3 Republican in the House will vote to impeach the president. Liz Cheney of Wyoming says President Trump, quote, summoned this mob, assembled the mob, and lit the flame of this attack. The daughter of former Vice President Dick Cheney has been a target of internal Republican criticism from Trump allies. Bloomberg's learned that President-elect Biden will probably name Wall Street critic Gary Gensler to head the Securities and Exchange Commission. Gensler ran the Commodities Futures Trading Commission during the Obama administration. The role put him in frequent combats with the banks. And the Trump administration is set to unveil last-minute changes to Fannie Mae and Freddie Mac. They would allow the mortgage giants to retain significantly more capital, but many of the thorniest issues on releasing the companies from federal control would be left to the Biden administration. Canada's convenience store giant Couche-Tard says it's in talks with French grocer Carrefour. Bloomberg's learned that the owner of the Circle K chain has made an offer that values Carrefour at about $20 billion, and that would represent a 29% premium to yesterday's closing price. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Jean-Paul, how different will the beauty market be in 2-3 years?
We'll see. You know, it's too early to tell. But I would bet that they won't change fundamentally. You know, I have been through many crises, and it won't be very different.
I'm David Weston. Bloomberg
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
To allow the President of the United States to incite this attack without consequences is a direct threat to the future of this democracy. For this reason, I will vote to impeach this president.
What the majority is asking the House to do is to assume a power it does not have. The House has no role in initiating Section 4 of the 25th Amendment, and we should not pretend otherwise. Instead, that power lies with the Vice President.
Free speech is under assault like never before. The 25th Amendment is of zero risk to me, but will come back to haunt Joe Biden and the Biden administration. As the expression goes, be careful what you wish for.
I can't say enough about how our team finds the voices there. Justin Chart-Banner's been with me for years, and he's wonderful at picking out selected voices. The president and two gentlemen of character from the House, Tom Cole of Oklahoma, truly one of the smartest people in the House, and John Katko, making history last night, is the first Republican to say he will impeach. He's from Syracuse, New York, a really interesting background, including as a trial attorney in real public service in the narcotics wing of our federal prosecution. Right now, Kevin Cirilli joins us from Washington. Kevin, there's 18 stories to cover, and I have to go to one that is shocking. The gentlelady from the 11th District of New Jersey, Mickey Sherrill, on her Facebook page last night, talking about reconnaissance in the Capitol the day before the rabble came through the doors. Is that even possible that people help them figure out the layout of our nation's Capitol?
It's haunting, and it's why the investigation from the process standpoint is so incredibly important. It's why, to be candid with you, there has been a palpable angst that has gripped this city now for 1 week, and everyone that works or touches the Capitol building over the past 7 days. Look, she came forward with those comments. I can all but guarantee that they will now be heavily investigated, and that there will be and that this had been discussed, in the rumor mill, so to speak, right, for lack of a better word. Yeah. But now it's in the public discourse, the zeitgeist, Tom, right, and it's going to have to be looked at. Absolutely, will have to be looked at.
After you do Sound On tonight, you will step off. Your entourage will get you off stage, and Kevin, you will have to digest at, let's say, 7 p.m. What's next after the certain impeachment? What is next?
The trial in the Senate. And I think, how many Republicans will vote to convict President Trump? It's been remarkable to look at the dynamics of the Republican Party and conservatism as a whole in the past week. I mean, look no further than Liz Cheney. We covered that. Liz Cheney saying that she will vote to impeach the president, the top three Republican in the House. Then it comes out that Republicans say that she should resign. I mean, the back and forth is dizzying, so to speak, about where the vacuum of leadership lies right now in Republican politics. It's unclear. Leader McConnell, according to the New York Times, open to having a Senate trial. What does that mean for the party moving forward? What does it mean for the 2024 crop of candidates? I would note, if you're a Senator Ted Cruz, for example, do you really want President Trump running for re-election again in 2024? There are so many different unknown variables that it's important to follow the process. So if you're looking for the next 24 hours, I would anticipate that the vote in the impeachment comes anytime between about 2:30 p.m. Eastern Time to 7 p.m. Eastern Time. And then the trial in the Senate, Leader McConnell, look for his words or his statements in the next 24 to 48 hours.
Kevin, as the Republican Party became the party of Trump, it now has to tear itself away and become the party without Trump. It's important to look at where the popular support lies. You speak with a lot of political strategists. What are they seeing in terms of Republicans, the rank and file voters, and how they would like to see this play out with respect to Trump's role in the party?
The pundits and the strategists would like to see the decoupling from Trumpism continue. I'm thinking of one lawmaker whose staff I spoke with on Deep Background, who's a Republican, who essentially really walked me through the division within the offices of certain Republican lawmakers on how to proceed. You have certain advisors who are saying your constituents in your deeply conservative districts are behind President Trump. And from a matter of practicality, in terms of the path forward for the Republican Party, we feel, according to the staffers, you have to break away from that. That is literally an open conversation that's not only playing out around the country in American families, but also in elected officials' offices.
Kevin, translate, what is deep background?
Deep background means I can't say who I spoke with, nor the office that I spoke with.
That helps, Lisa, because Pharaoh uses that all the time with me. Pharaoh goes, I'm on deep background. I'm like, what are you talking about, John?
He's been on deep background for the past month. There is also a question going forward.
I've been on deep background for 5.5 years.
I'm going to use that tonight. I'm going to use that tonight with afterthought. Lisa,
exactly.
continue.
Some deep background with a deep glass of scotch. I do want to ask, though, about what the collaborative efforts will look like with Republicans and Democrats, because Joe Biden is trying to strike a tone right now, saying that there's going to be a kumbaya moment in Washington, D.C. Everyone's going to work together and push forward some sort of fiscal stimulus. Is there the appetite for Republicans to work more closely with Democrats for this to be a real reality check for the Republic, or is that really wishful thinking?
You know, Rick Davis and I, last night on Bloomberg Radio, we put this question to Congresswoman Abigail Spanberger, and she's a centrist Democrat who beat Dave Bratt in a deeply conservative district in rural Virginia. And I was struck by her answer that she gave me, Lisa, because you know what she said? She said, maybe it doesn't even come in front of the cameras and the microphones. There is definitely an appetite for it. Do the voters want it? Do the voters want to see that reflected back to them in their American political system? I don't know. But I can tell you that there is a need for it and a want for it from lawmakers, even if it happens behind closed doors.
Really well reported. Kevin, seriously, 30 seconds. What will the president do today? Will we hear from him?
Well, we won't hear from him from Twitter, so I'll leave it there.
Okay. Kevin Cirilli, thank you so much. Just a terrific report. Our chief Washington correspondent. Lisa, what a moment.
Yeah.
I mean, you know, we're losing scale. Remember January 4th? It feels like, I don't know, 8 months ago?
I love the expression Jim Caron was saying, you know, we want our money back for 2021. It was supposed to be so much better. I don't know. I do think about the splintering, though, of the Republican Party and the sort of existential question of what the soul is. And that's going to definitely be at the heart of all of politics in the U.S. for the rest of this year, certainly,
And
Tom.
so many of the politicians we're speaking about, including Congresswoman Sherrill from, I believe, the 11th District of New Jersey, across from in New York out to Montclair, all these people have pretty close contests. I mean, there is a politics out there, folks. It's not Idaho Republican or Massachusetts Democrat, pick your Democratic state or island, Manhattan, but there's some real close contests out there as these politicians adapt to it. We adapt to it by a market check, -10 on SPX futures, Dow futures at -54. Yields not part of the story, dollar fractionally stronger. Coming up, looking forward to speaking to Mark Howard of BNP Paribas on the allocation amid this crisis. Washington Awake, stay with us on Bloomberg Radio and Bloomberg Television. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Good morning, everyone. Bloomberg Surveillance on radio and television. Lisa Bramwitz and Tom Keene, John Farrell on assignment. Futures deteriorate in -10 as well. The Biden administration, I should say the transition team, with a comment on Samantha Power taking on new duties. We'll have that for you in a minute. Of course, a former leader of our effort at the United Nations, Samantha Power, to join the Biden administration. Right now, we join the equity market outlook with futures at -10. We do that with Romain Bostic, and we affirm he's been wonderful. What do you got, Romain?
All right, well, let's start off with some of the biggest movers pre-market right now. Twitter actually getting an upgrade here. Remember, Twitter really been beaten down, getting caught, of course, in that political vortex over the suspension of Trump's accounts. Now, of course, a lot of folks are saying that basically once you start to get live events coming back, once we get to the other side of COVID, this should actually help Twitter and maybe make up for whatever loss they might have on the political side. Palantir, interesting here, move here, actually getting a downgrade here, getting cut to sell. And this is interesting. Remember, this was a big direct listing last year. The shares at one point had almost tripled, but they never really won over the sell side analysts. Right now, of the 8 analysts that we track that follow this company, only 1 has a buy rating, 4 right now, including Citi, now recommending to sell. And the consensus price target about 37% below where the shares closed yesterday. But just very quickly here on the screen, we should point out, KB Home did report earnings, really knocked it out of the park. Expectations were low, and they really cleared a very high bar. Chewy, Tom, not sure if you heard of it, on fire right here, getting a price target raise to about 120.
Okay,
everyone's buying. Chewy is
hold
hot,
on a second.
Tom.
I just want to be real clear.
Yes,
Tom would not feed his dogs Chewy. He gets something that's home delivered every morning, akin to one of these home delivery services.
I just got a personal thank you note from the leaders of Chewy. We're buying so much stuff from that site. Romain, I want you to cut it off and go right to Affirm. Folks, I don't get fired up about the tech IPO world of Romain Bostic, but I am here. Romain, this is a huge signal for technology, isn't it, to see Affirm explode?
It is a huge signal, and obviously a huge sort of victory lap here for Max Levchin over, who of course formerly of PayPal there. This Affirm has really been one of these stocks everyone's keeping an eye on, or companies I should say, to come to market. It appears they're going to pull this off. Their price last night came in well above what the initial chatter was, and we'll see what happens when this actually comes to the secondary market.
Do you have an indication right now, Romain?
I have no
we're
indication
33.
on my screen right now. I mean, right now I'm actually staring at the back of your head, so I have no idea where this is actually going to open. But right now, I can tell you, Tom, the chatter on the street right now. Hello,
His
Tom.
head's very important. It says a lot.
Our viewers out there, don't pay attention to this. This is
and listeners. Tom's just spinning around.
Come on, seriously, Romain, seriously. We're at 30-something.
Yeah.
We show 41. We go to 49. Up we go in billions. Is this going to be unlike Uber and Lyft? Is this going to be like open up that big with some legitimate income potential?
Well, the trend pretty much says, yeah, most likely. It's hard to know for sure, but when you look at some of the more recent IPOs that we've had, particularly in this space, fintech, whatever you want to call it, we've seen the appetite, the demand is there. Most likely, that's probably what we see today. I do want to pivot to something really quickly, if we can, Tom, and really what's been going on in the EV space. Remember, we saw GM shares actually close at a record high yesterday, record from, of course, that sort of post-bankruptcy IPO. A lot of enthusiasm here in the EV space, of course. They're working on that commercial delivery vehicle for FedEx. You also had a deal with Plug Power and Renault. A lot of folks in this space really rallying. And if you really want a good taste of that, you take a look at the ECO Index, ECO, and it has nothing to do with the economy. This is the Wilder here Clean Energy Index. It's basically a good proxy here for what's been going on, not only in the EV space, but for solar power as well. You see the outperformance there on a 6-month basis. You're talking about 180% price return. You compare that to 20% or whatever you're getting on the S&P. And even if you had invested in big tech, the FANGs there, you're getting about a 30% price return.
Romaine, thank you, sir. I greatly appreciate that. Lisa?
Yeah, I will say, talking about tech IPOs and the Affirm initial public offering that was so successful raises an issue that Jeff Gundlach raised of Double Line Capital yesterday on his call. He said that the IPO flurry is, quote, out of control. Mark Howard, not Howard Marks, Mark Howard, although he does get confused with him and has lots of stories about Howard Marks. Mark Howard of BNP Paribas joins us right now, senior multi-asset specialist. Let's start with those tech IPOs. Is this a sign of froth that is a sign of caution to you?
Good morning, Lisa and Tom. It's something you certainly need to monitor, but given where rates and real rates are, and given the shift that's happening in Washington over the coming weeks, I don't think it's an unreasonable set of developments. Moreover, with the new economy post-COVID, many of these tech IPOs are going to have increasing relevance and increasing applicability in the new economy. So I don't think it's crazy, but we're certainly watching it.
And there's a question of how you avoid pockets of froth, because it does seem like there's a recalibration right now with Bitcoin, for example, or as Tom calls it, BitDog, coming off a bit, and you could see the dollar strengthening a bit as people reverse some of those short positions. Do you think that there will be other frothy areas that will get kind of burned out in the near term, or do you think that this is all just going to keep grinding toward the way that it was a week ago?
So that's an important question, Lisa. I don't think there's going to be a lot of further burnout. And in particular, I point to what happened last week and what I think is underappreciated on the part of investor behavior post last week. Of course, what happened at the Capitol was terrible and was gathering all the headlines. But what happened in the Senate is also really important, and the combined effect of those two events is causing investors to pivot in some interesting ways. And I think it's a more risk-on pivot, but gradually and subtly. And we're seeing that in the credit market. We're seeing that to a degree in the equity market. But perhaps most importantly, the rates market had already discounted a lot of risk on. And so I think if we saw rates leap higher, then yes, I would be very worried about some of these overvalued categories. But we don't see that, and we don't think we're going to get a lot of taper discussion from here. We think that's going to start to moderate.
Mark, the first thing I looked at today when I looked at the correlations was Asia DXY. This is, folks, the foreign exchange of the Pacific Rim ex the Japanese yen. There's a remarkable resilience to what we see in Asia DXY, strong currencies over there. What does that mean for their equity markets?
Well, Tom, I think that one of the things that is happening around the world, particularly for DM investors, is this search for return in a very low yield environment, but particularly against the backdrop of 2020, where returns were much more robust than people thought. Forward returns are low. So when you see positive signs coming out of DXY, coming out of Asia, other EMs, not all, but other EMs, it just reflects the fact that people are reaching further for returns. They can't get it in some of the traditional developed markets. They may be more cautious about some of the DM growth areas like technology, where the bloom has come a little bit off the rose for a variety of reasons. So they're looking elsewhere, and we expect that to continue. We're generally constructive on emerging markets for 2021.
What is, unpack that for us? I love that phrase. Unpack that for us. When you say you're constructive on EM, what is the action of being constructive?
So with EM, just like other higher vol sectors, you have to be selective. But we like both EM equities and EM credit, sovereign in certain cases, corporate credit, in countries that show financial resilience, that have a certain degree of commodity exposure, and obviously where there's good governance and not political strife. And so there are a variety in all three parts of the world. We see opportunity: Asia, CEMEA, and LATAM.
How much does that long EM trade really hinge on an ongoing weakening of the dollar?
Well, we do have a core view that the dollar is going to see depreciation versus most major currencies, including an EM basket, during 2021. It doesn't just hinge on that, Lisa. I think the global liquidity flows and this reach for return that I mentioned is another very powerful factor. So the dollar can have periods, just like we had a couple days recently, where the dollar breaks its trend and moves higher against other currencies. I don't think that would delink or derail the EM trade. I think it's more about the global asset allocation shift in search of alternatives, private assets, and growth assets, not just in the DM, but in other parts of the world.
So what would you say to the Stephen Majors of the world of HSBC, who came out this morning and said the reflation trade has pretty much gone its course, it's gotten a little ahead of itself, and he actually sees value in developed market bonds and treasuries, where he sees yields falling to 0.75%, saying we're not going to see a great deal of inflation, we're not going to get a whole deal of growth, and frankly, people are going to come back to havens as we get bumps along the road. What would you say?
I think Mr. Majors had a terrific call over many years. I think that he may be underestimating what has transpired here in the U.S., in Washington, that Kevin and others have reported on, that we're going to see more, and I think you mentioned this, Lisa, more cohesion in the center, and we're going to see more fiscal stimulus and maybe even a meaningful infrastructure package. Those two things are going to be positive, not just for domestic growth, but for global growth. And on top of that, we're going to see more of the Biden team get approved by the Senate, which is going to help the global picture, the global landscape. And that's going to be positive for sentiment and for growth over time. Yeah. So we don't see rates going back, certainly not to zero. And in fact, we expect the U.S. 10-year to be up 140, 150 by the end of this year.
Mark Howard of BNP Paribas, thank you so much for being with us. And Tom, as Mark was talking about how the Biden administration is really shaping up, we are hearing about Samantha Power, as you talked about, going to head the U.S. Agency for International Development. We are getting a firming up, Tom, of what that Biden administration will look like.
This is much, much bigger than that. This is the first real sea change, Lisa, in restructuring the Trump administration. This is Samantha Power, who formerly was our ambassador to the United Nations. And what we're doing here is going into what President Trump did with USAID. And not only is President-elect Biden taking Ms. Power, but he's also elevating USAID up to the National Security Council.
Yeah.
So you've got to believe there's a budget follow-on to that to restore, Lisa, or even enhance USAID off of where it was with the Obama administration.
Yeah, and we've heard consistently from the Biden administration they want to reestablish ties with some of the United States' allies. But this comes as the Trump administration doubles down on some China policies, putting out a report overnight about the plan for China. I mean, the crosswinds, very hard to keep track of.
Perfectly said. The crosswinds right now, folks, in the development of an administration and the final gasps of the Trump administration, extraordinary. Stay with us on radio and television. Megan Rainey, Brown University, with us. This is Bloomberg. Good morning.
With the First Word News, I'm Ritika Gupta. It's a historic day on Capitol Hill. The House will vote today whether to impeach President Trump for a second time. The vote comes a week after a mob of the president's supporters stormed Capitol Hill. Late yesterday, the House voted to demand that Vice President Mike Pence use the 25th Amendment to remove the president from office. That vote was largely symbolic. The vice president had already said that he wouldn't comply. President-elect Joe Biden will seek a deal with Republicans on another round of coronavirus relief. Bloomberg has learned that the approach could mean a smaller initial package that includes some priorities backed by Senate Republican leader Mitch McConnell. The goal is to avoid trying to ram through a bill without Republican support. President-elect Biden has named former United Nations Ambassador Samantha Power to head the Agency for International Development. Biden also said he would make the post part of the National Security Council. That's a sign his administration will emphasize the role of development in maintaining security. Power is an immigrant from Ireland. In London, financiers are keeping the faith that they can win back access to the European Union in the next round of talks. Their industry was left out of that Brexit trade agreement, but in a poll by the consulting firm EY, 76% of bankers said they do expect the EU to grant some form of equivalence decisions, and that would open the door to more market access. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Substantial further progress means what it says. We'll be looking for inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
vaccine is the weapon that will end the war, but it won't hit critical mass until June, September, or even December. If we float along, relying solely on the vaccine, the way many states are, we are looking at months of shutdowns and the economic, mental, and spiritual hardship they bring. We need to begin to act now.
And what we need is historical perspective. The governor of New York State, as all of our nation, particularly this morning, Arizona, confront a pandemic. There have been different voices that we have spoken to with different expertise. Megan Rainey's expertise is out of the magical part of Harvard, which is their history of science, to Columbia P&S, to a real understanding of the process of modern medicine. She holds court at the Rhode Island Hospital of Brown University. We're thrilled that Dr. Rainey could join us this morning. Megan, you have had such initiative around the actual process of this pandemic, being in the emergency room, being in the ICUs. What have you learned since March of last year?
I mean, honestly, what haven't I learned since March? We knew virtually nothing about this virus at the beginning. We were doing our best to make up procedures and to find treatments as we went along based on what we knew about other similar diseases. We now have standard treatment protocols, standard lab protocols. We know so much more about how to take care of these really sick patients with desperately high oxygen needs. We're avoiding intubating them and therefore keeping them alive actually much longer. But I've also learned a lot about public health. Masking, physical distancing, and hand washing remain our best protections from the virus. And although, as you mentioned, I studied the history of science as an undergraduate, and so know very, very well the degree to which politics and science often intersect.
Yeah.
I think that had never seen in real time before the way in which facts can be twisted and misinformation can be spread to a population, allowing this disease to spread.
Well, Dr. Rainey, as much as we learn about the disease, it seems to change in real time. And the B117 variant has been spreading like wildfire throughout Ireland, throughout the United Kingdom. And Dr. Tom Frieden, the former head of the CDC, recently said if it spreads here, it will make an already bad situation even worse. What's the likelihood of that happening? What does that look like?
So I think it is almost inevitably going to happen here. And we've already identified a number of people across the United States infected with the B117 variant. And that's despite the fact that we sequence virtually none of our positive cases on a daily basis. So the fact that we found them is saying that it is already here. And we know from the experience of Britain and Ireland that once it takes hold, it spreads like wildfire. The thing that worries me is that our hospitals are already at capacity. Yesterday we were well over 4,000 deaths across the country. When this takes hold, when this starts to spread, we're going to see already overwhelmed healthcare systems just all become like what LA is experiencing right now. And then the thing that worries me even more is going to be the impact on schools. Right now, many school districts have been able to safely stay open with masks and a little better ventilation. That may change with this new variant.
How quickly can vaccinations start to reduce the community spread? When do we actually see the effect of these?
So, as you and I were talking just before the show, I just got my second shot. Many, but not all, healthcare facilities across the United States are actively vaccinating their workers. If the Biden-Harris plan to get 100 million doses in arms in 100 days works, and based on discussions with them, I have every faith that it will, that'll mean that we have about a third of America vaccinated by like the end of April. So we're looking at the average person starting to have access to vaccines in like May, June, July. And that is a best case scenario that will have most American adults vaccinated by the middle of the summer.
Dr. Rainey, Rhode Island Hospital has a certain character. Full disclosure, folks, I went in there one night with an injured foot a million years ago. Rhode Island Hospital has a certain character about a tough part of Providence, Rhode Island. Can you discuss the idea that the virus is out there for all of us, but we're seeing observed inequalities, and particularly among essential workers we rely on each and every day?
Thank you for asking that question, and I hope we took good care of you. We certainly see that everyone is at risk for this virus, regardless of your power or wealth or privilege. It doesn't protect you. But I am seeing a disproportionate number of minority and frontline workers who are getting sick. A higher number than normal of my patients are Spanish-speaking or Cape Verdean immigrants, and we're seeing a lot of our own staff and their families get sick. A lot of our staff, our nurses are married to firefighters or police, teachers, et cetera, and we're seeing it spread among their families. This is disproportionately affecting the folks that simply can't stay home because they're doing the jobs to keep our society working.
Dr. Rainey, a very important question. Our Kevin Surley spoke to Dr. Birx, I believe it was 2 days ago. We have the Fauci and the Birx of the Trump administration. 2020 was sporting for pros like you. Tell us what the Fauci-Birx medical community will look like in 2021. Does the new president have your back?
So I am so excited about the new president and his administration. He has put together a truly top-notch team, not just one or two people, but an incredible team of advisors, ranging from Dr. Marcella Nunez-Smith, who's going to advise him on diversity and equity, of course, Dr. Murthy, who was the Surgeon General under Obama, and a huge number of other folks under him. And then those of us that have our day jobs and are not ready to give them up can be, we're talking to the folks in the administration who are advising them. We have a large network of medical experts. They're not going to be isolated the way that Fauci and Birx were.
Dr. Megan Rainey, thank you so much for joining us at Brown University, and thank you for all that you do as we combat this pandemic. Tom, you cannot mention that you hurt your foot and went to the hospital in Providence, Rhode Island, without some sign of what that story was, because it was a story.
There was a guitar involved. This is really important, Lisa, in that I'm going to be very blunt here, and like Bridgeport and other parts around this country, there are some really tough parts of Providence. I don't think, frankly, there's a New York City equivalent. And Rhode Island Hospital is one of these places where fancy, educated people like Dr. Rainey go, and they are in the trenches of emergency medicine, starting with gunshots.
Yeah, and frankly, that's a question, right? How do you deal with the pandemic on top of everything else? When she starts talking about how the LA situation, the lack of oxygen, could be the template for the rest of America, when this variant comes to spread more rapidly, that's a concern.
We've got team coverage from West Hollywood out in Los Angeles, and I'll tell you, Lisa, it is locked down out in Los Angeles. As I mentioned earlier, Arizona, especially difficult today. Lisa, what else do you see within this pandemic?
Well, in this pandemic, we're moving ahead in this whole concept of reflation. How can you reflate if we're not there yet? And the whole idea that she was talking about, Dr. Rainey, about the vaccination schedule. How quickly can these vaccines actually put an end to the pandemic? We've kind of jumped ship already in terms of controlling it in any other way, Tom.
And Lauren Sauer of Johns Hopkins was right on that about trying to get to an accelerated growth of vaccination to get like a real acceleration of the virus as well. We'll have more from Washington this historic day. And on the markets, we're thrilled to bring you Robert Dahl of Nuveen. On radio, on television, nationwide, this is Bloomberg.
For a typical clothes wash, up to 700,000 fibres can come off our clothes.
Permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc, une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles, et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Of the virus, the pandemic, and the vaccines will really determine the course of the future economy.
We're still living through a demand shock of COVID.
We think the economy has shown fairly good resilience to this third COVID wave.
Now the bottom has really fallen out of low-income spending.
In the last several weeks, the mood has changed dramatically.
You're likely now to see some churn. You may see a pullback in markets.
Last year was all about hoarding cash, putting it on your balance sheet, make sure you survive. This year, it's more about investment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning. This is Bloomberg Surveillance, the simulcast, Bloomberg Radio and Bloomberg Television. Jonathan Farrow, Tom Keene, and Lisa Abramowitz. John Farrow off today. Really interesting to see how the tumult of Washington, D.C. continues with the expected impeachment vote today. Tom, the further splintering of the Republican Party.
Well, we saw that last night with the 5 Republicans moving over with Congresswoman Cheney of Wyoming leading the way. But what's interesting, as Kevin Cirilli mentions, Lisa, is what do we do after, say, 5 p.m. as they move impeachment forward to the Senate? Again, to remind you, it's a 2-step process in the Senate, convict or not, and they're in search of 17 votes. Kevin Cirilli, Lisa, making clear that will be difficult.
And for markets, the question is, what are the political consequences of this splintering, of this breaking away of the Republican leadership from President Trump? Does this mean a more unified Congress that can push through some sort of stimulus package as Biden would like to see? This, to me, is probably more consequential for markets than the sort of larger questions right now about the future of the nation.
Well, I think our conversation right now with Robert Dahl is going to be so important, Lisa, that we've got to frame this out to get to the optimism of Bob Dahl. And Lisa, Greg Villiers publishing this morning that it's, instantly we go from a measured 1.3 trillion of stimulus. Lisa, I'm hearing a framing of numbers up in the vicinity of 2 trillion.
And it seems like there's the appetite in the Republican Party. If John Farrow were here, he would say, where are the budget hawks? We're going to be getting that budget statement later today.
Well, they were defeated.
And they don't exist, right? I mean, a budget hawk right now is talking about $600, $700 billion stimulus, not a $2 trillion stimulus.
They're there. Maybe the budget hawk is a gentleman from West Virginia, Mr. Manchin. I mean, maybe he's the one who's going to step in and, be decisive there. But whatever it is, the tone really appears to change. Futures -14, they deteriorate. The VIX up 0.52 points, 23.8. 0.85 on futures. I just would note dollar strength, bonds giving me no information. Bitcoin, we've got a quote for Bob Dahl, 34,120 on Bitcoin, down $4 zillion since Bob bought it at the top 40, 45.
You're channeling your own
50,000 as well. Bob, I have missed this to say the least. Robert Dahl is with us. He's with Nuveen Asset Management, and he is the guy who kept you in the market to enjoy a 10-year per year return of 15% plus. The Dahl mandate, you got to be in the markets to play. Describe the play this morning, Bob Dahl. Why should I be in the equity markets?
Because the economy and earnings this year are going to be off the charts. We're going to have the strongest economic growth this year in at least 20. Could be as many as the strongest growth in 36 years. That will carry earnings along. This will be a great year for the economy and earnings. I think it's just a good year for the stock market. In other words, I think multiples are held back a bit, Tom, because of modestly rising interest rates and inflation.
Behind you is the logo of the esteemed Nuveen of Chicago, owned by TIAA Craft, you know, the retirement combine. Good morning, Roger Ferguson. Bob Dahl, do you need to raise your actuarial assumption with double-digit returns, Democratic President, House, Senate? Do you begin to lift up our actuarial return?
Oh, maybe for the next few months, Tom, but longer term, I don't think so. Stocks and bonds are both expensive relative to their history. Therefore, the next 5 and 10 years, the return's probably going to be a lot lower than it was for the last 5 or 10 years. That's the law of averages. So it's going to be harder to make a buck going forward.
How much harder? In other words, are we looking at a 1% future, or are we looking at a 3 or 4% future? It makes a difference when you look at some of the liabilities.
Agreed. So if stocks were 15 for the last 10 years, I'll guess half that for the next 10 years. 7, on a good day, 8. Bonds are going to be a lot lower because they're coupon. You can't take rates lower than where we were. And therefore, if rates climb higher, we're going to erode the coupon. So return on Treasury bonds are going to be close to 0.
Wow. Meanwhile, we have the U.S. continuing to borrow money, and Tom and I were just talking about how the hawks have been defeated, have disappeared, however you want to frame it. Are we moving toward a modern monetary theory world, and what does that mean for markets?
I suspect we are in that world, and whether we've called it that or not. Look, I think the question I get from financial advisors most over the last 5 years is, what about the debt and the deficits? And my response was, and still is, it doesn't matter yet. You see, interest rates have fallen faster than the debt has gone up. So interest expense as a percentage of our economy has actually gone nowhere. And therefore, it's not been an issue. If we pile up the debt and interest rates start climbing higher, then we're going to have a day of reckoning.
Bob Dahl and Tom Keene reading Heilbronner and Bernstein. This was a few years ago on the debt and the deficit, which was a gospel on the confusion of cash and actuarial accounting. Bob Dahl, I want to get back to the markets. You know the acclaimed Ibbotson chart out of Yale University. But within that lower left to the upper right, there is rotation. How do you play the rotation of 2021?
After a decade where economic growth globally has been so-so at best, which has favored the U.S., our economy, our markets, and our currency, because we are the most defensive economy in the world. We have fewer cyclicals. We are now reflating. Thank you, central banks all over the world. We're going to have some stronger growth, and therefore batons are getting passed from growth to value, from big to small, from U.S. to non-U.S.
What about the battle of active and index? Nuveen really takes both parts of that equation, but there's just a general feeling out there about stock picking or sector picking, or the value of buying indexes or sub-indexes. Which is it?
So in a year like last year, when the big 5 stocks outperformed by massive amounts, that's a year for the index. If this is a year when those half-dozen stocks don't perform as well as the averages, which is our guess, then the average stock begins to do better and active managers have a better chance. I think the average active manager will outperform in 2021.
Well, everyone wants to be an active manager, at least if you take a look at the Robinhood accounts and people sitting home getting their stimulus checks and putting them into individual equity. I was looking at one statistic yesterday that a handful of penny stocks accounted for a fifth of all U.S. equity trading on Monday. How much do you think about that increased retail presence in equity trading when you think about asset allocation?
It is definitely a force out there. It's a narrower group of stocks, as you hinted at, and therefore you have to know kind of where are they playing. Now, some of those Robinhood investors actually did very well. They bought into the decline last March, and they bought high beta stocks. So they've done reasonably well. We got to watch them carefully. That group, along with the algorithms, create the issues for buying and selling stocks all day. You got to be really careful.
All right. In the meantime, you have these IPOs, the tech IPOs coming out. We were talking about a firm earlier with incredible valuation. Some people saying they're worth it, others saying signs of froth, including Jeff Gundlach of Double Line Capital. Where do you weigh in? I mean, how are you playing in some of these IPOs?
Lisa, I think that there is merit to the fact that the size of them, the number of them, the premium that they're selling at means we've got some speculation. Now, it's easy to compare it to where we were at the tech.com bubble. We're nowhere near that level in terms of valuations. Remember, there were no earnings then. There were few sales. It was price to clicks, price to eyeballs. Now we can at least touch the revenues of these companies. So I don't want to sound the alarm like we could have or should have or did sound back then.
Bob Dahl, you've been such a sane voice for participating in the markets over the years. Richard Edelman joined us an hour and a half ago as well with his famed Edelman Trust Barometer. And it's about media distrust of politicians, distrust wrapped around vaccination. I want you to talk about your world in the Friday onset of gloom that's out there. You know, as a rule, every Friday the gloom crew comes out to beat up Bob Dole. How do we get back the trust of Wall Street strategists who've enjoyed this bull market? How do we get a belief in that optimism?
I think it's going to take some time, Tom, and some returns that are good. Look, last March, February, March, destroyed a lot of people's faith in all the things you just mentioned. All they had to do was hang around or blink. I mean, if you were Rip Van Winkle, you thought last year was a good, calm, quiet.
Ladies and gentlemen, order placed to sell short British pound at 136.74. Okay, so all of you guys who want to sell short British pound, you have a chance at 136.74. Just placed an order and let's see if it will get executed. But it's look like it's moved too fast, too far. If it will move, let's see. Let's see how this candle will end up. If it will end up lower, I will have to cancel the order. Okay, I moved down to 136.73. Okay, order placed to sell short at 136.73. I'm still waiting for the order to get filled. Too many orders probably at this level that want to get filled. I'm still waiting for the order to get filled. And still. Okay, position opened on British pound at 136.73.
Frequent combat with the banks. Now, the Trump administration is set to unveil last-minute changes to Fannie Mae and Freddie Mac. They would allow the mortgage giants to retain significantly more capital, but many of the thorniest issues on releasing those companies from federal control would be left to the Biden administration. Canada's convenience store giant Couche-Tard says it's in talks with French grocer Carrefour. Bloomberg's learned that the owner of the Circle K chain has made an offer that values Carrefour at about $20 billion, so that would represent a 29% premium to yesterday's closing price. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
What do you think you would like to do when your term as Secretary of State is completed?
David, I think I've answered all your questions. I may kick this one. I don't know precisely what I'll do.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
initial reaction by some companies to suspend all political donations, to me, is not intelligent. We should say those who voted against the approval of the Electoral College vote really need to be scrutinized. To say that we won't donate at all to politics, I think is fallacious and not sustainable.
Richard Edelman this morning, important comments there on his Edelman Trust barometer. What we're really good at, Lisa Abramowitz, Jonathan Farrow, and myself, we try to get out front, and we've got a team that puts together guests. And then we know when the news changes, when the facts change, we tell the guests to change. We can do that with Lester Munson, with BGR Group, with a distinguished career in Washington in foreign policy. Lester Munson, we learned moments ago from what I think is the most important signal from the nascent Biden administration that they will take John Fitzgerald Kennedy's U.S. aid program, which has been a political football for 50, 60 years, and they will restructure it and elevate it to a White House position with Samantha Power. What is President-elect Biden signaling?
Well, for folks who follow foreign assistance issues and soft power and these kind of more obscure aspects of American diplomacy, it's terrific news. Samantha Power is a force. She's an intellectual powerhouse. I'm not saying she's right about every single issue, but she's dynamic. She's interesting. She's going to bring a lot of energy and verve to what has been, frankly, a sleepy agency in the U.S. government. And I think it's a huge opportunity for President Biden to make a difference around the world, particularly in the developing world, a place where we haven't really been present for the last 4 years.
If we assume, whatever our politics, that we are restructuring USAID, are we going to restructure state? And do you look for the same drama from a new State Department?
That's a great question. One of the things that President Biden appears to be doing is really strengthening the NSC, which means he's pulling power into the White House. That's not great for the State Department. Tony Blinken's a trusted advisor. If he's confirmed as secretary, as I expect he will be, that'll be a plus for the department, but there could be rocky times ahead for the State Department.
Lester, as a never-Trump Republican yourself, who still considers himself a Republican, who worked in the Bush administration, how does the Republican Party without Trump distinguish itself from the Democratic Party of today?
Well, I think there's plenty of issues where that can happen. Economic issues, social issues, foreign policy. Republicans are a hawkish national security party. We need to find that voice again. It's been modulated and muddied up during the Trump years. Liz Cheney's as good a carrier of that message as anyone. Adam Kinzinger, who's going to be supporting her in voting for impeachment of the president, is another excellent voice in that regard. So I see some of these younger, more dynamic Republicans emerging from this chaos.
Do you think that those younger, more dynamic Republicans will vote in tandem with Democrats to get some sort of fiscal stimulus through, to get some of other aspects of Joe Biden's administration through, even if it sort of muddies this line as they try to reestablish their identity?
Well, I think that's going to be on a case-by-case basis. Republicans are occasionally fiscal conservatives. Not so for the last 4 years. They seem to be rediscovering that, as they often do when they're not in the White House, so there's a little bit of cynicism there. But I expect that Republicans will be more skeptical of massive payments in response to the pandemic. But there'll be places where Republicans, never-Trumpers, and even some pro-Trump Republicans will find a way to vote with the Biden administration. I expect there to be more bipartisanship than people think in the next few months.
Lester, I don't want you to game what we see after 5 p.m.-ish today, but can the Senate find 17 Republican votes to convict the President of the United States? I know that's an unfair question to you, but that is the question of the moment.
It is the question, and it's what everyone's reading between the lines for. It's a very difficult goal. It's a high bar to get over. The fact that Mitch McConnell is out there signaling that he might embrace this process is very telling. He does not do things on a whim. He would only be sending that signal if it looked like there was progress towards that goal. Now, there's plenty of road to go down here, even though it's just a few days. there's a lot of work to be done. There's a lot of voices we need to hear from, but it does seem like things are trending in that direction. I still think it's probably too difficult to quite get there, but we're on the way.
You know, I look, we're on the way, and, you know, we're on to new changes. I want to circle back, Lester, to our foreign policy. What, again, is there going to be a strategy or a theme that you can glean now from Biden foreign policy or not?
It's hard to say. You know, during the campaign and during the transition, the Biden people would put out kind of boilerplate statements saying they wanted to restore U.S. leadership in the world. And I think those of us who are in the swamp or a little more cynical kind of dismiss that. But that's a very real thing right now. Given the events of last week, President Biden is going to have to take active steps to restore the image, the posture, and the leadership of the U.S. in the world. He's just going to have to do that. It's going to take a long time.
Lester, thank you so much, particularly on that breaking news of a new USAID program for President-elect Biden. Lester Munson with BGR Group. You know, Lisa, I was watching Home Alone 2 last night, and, you know, I tear up when I see that scene in Home Alone 2 with what's called the Trump rink or the Woolman rink, the acclaimed Woolman rink at the bottom of Central Park. Mayor de Blasio announces, Lisa Abramowitz, that they're going to pull all relationships, I'm ad-libbing here, folks, with the Trump organization. And Lisa, I'm sorry, the first thing I thought of was Lasker and Woolman rinks.
The first thing you thought of was Home Alone, which you were doing
It's a good
serious
movie. I've
research.
seen it 15 times.
I'm sure you have, in Home Alone 2 and 3 and 5. I do think this is significant in terms of the personal fallout, the financial fallout for the Trump empire and what it's going to look like. There was a report out of the New York Times, Maggie Haberman, reporting that President Trump was more upset about losing the PGA tournament from his Florida property than even the impeachment. It really goes to this question of what it will look like following his exiting of the presidency.
Yeah, we'll see with the different relationships across what was his New York City. Of course, he's made clear, I believe he's taking up residence in Florida here at the end of his presidency. Mayor de Blasio on Trump organization. We'll have much more on that through the day across all of Bloomberg News. Lisa, what do you see on the tape? It's a snooze fest to me. I mean, Farrow just emailed in. He's dozing off in Capri.
It's fluctuating between gains and losses, now losses. But what I find interesting really is yields, the idea that they're coming in, that we see price up, yields down. Yesterday, that 10-year auction was actually incredibly strong. Today, we get another auction of U.S. debt, 30-year bonds, and the investors want to buy. Even as we see, we're expecting that incredible deficit reported today at 2 p.m. Eastern time. People still want to buy the U.S. debt because where else are you going to go? And it is high relative to the rest of the world.
Yeah, Lisa, Brad from Brisbane emails in, and he says Woolman rink last year was 9.4 net clean for, I guess, the Trump organization. Do you know that 9.1 million of that 9.4 million was concessions and hockey fees for the Keene family?
Have you ever bought hot chocolate at Woolman Rink?
Yeah, exactly.
That should explain why they made that money.
You got to sell a couple Bitcoin to get that
seriously. Let's be honest.
A little bit of inside New York City there, folks. Speaking of New York City, Michelle Meyer, Bank of America, with us on radio, on television. Good morning.
Y lo más increíble es eso, no solo estás sintiendo frontalmente, sino que en la espalda también, entonces a lo mejor estás jugando y sientes que por detrás te pasa algo, entonces...
Y ve cómo te tiran algún objeto, o cómo notas la sensación, ¿no? Como que te golpean a ti. O yo creo que hace que empatices mucho con los personajes y que sea todo mucho más real.
How different will the beauty market be in 2-3 years?
We'll see. You know, it's too early to tell. But I would bet that they won't change fundamentally. You know, I have been through many crises, and it won't be very different.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Bloomberg Surveillance, good morning, everyone. Lisa Bramwitz and Tom Keene, John Farrow on a needed sabbatical. Michael McKee with us on economics. And before we get to Mr. McKee with that 8:30 or maybe a little bit after it, economic data, the idea of futures at -11. Michael, do we inflate, deflate, reflate, or disinflate?
Right now, on a month-over-month basis, we are inflating. We come in bang on where economists had thought we would. 0.4 rise for CPI on a month-over-month basis in December. The year-over-year rate rises to 1.4%. That's a little bit higher than the 1.3 forecast. The core rate comes in at just up 0.1 on the month, and it is 1.6% unchanged from the prior month. Basically, what the government is saying here is that energy prices rose by 8.2%. Energy overall, 4%. Energy commodities, 8.2%. Gasoline, 8.4%. So what we're looking at here is an energy-driven increase, and that was what people had factored in. Another jump in new vehicle prices, up 0.4 on the month. Medical care, interestingly enough, falls by 0.4, even though we're all going out to try to get our vaccination shots and our COVID tests. Shelter up 0.1%, and everybody keeps track of what's going on with the housing industry. That's the overall category, but it does look like that is under control at this point.
You know, Mike, it's interesting. Jim Caron was talking earlier about how it's not enough just to get a recovery this year. We need to get an economic boom, and that certainly applies to inflation. We need to get a certain critical mass of inflation to avoid a disinflationary spiral. What is that tipping point to get us out of this vortex that we've been in?
Lower for longer, or higher for longer, put it that way. What we're going to need to see, Lisa, in terms of the Fed, is the inflation rate climbing to 2% and above and staying there. I brought a chart along, I hope they have it here, that basically shows you we are going to get inflation. You take a look at what happened last year, the blue arrow there, that's where we are. That's the December year over year. And then you look at what happened when we got to April, May, and June, we had deflation because of the pandemic shutdown of the economy. So when those fall out of the year-over-year calculation, we're going to see inflation jump. But that's just a statistical quirk, and it's going to have to stay higher for longer to convince anybody that inflation is really a threat.
Michael McKee, I talk about the pandemic partition of goods and services. I see goods up a little bit here. You mentioned energy, but there's no obvious note here of a turnaround in service sector disinflation towards a higher level, is there?
No, and that's the problem at this point. The service sector is still largely shut down, so there is not a opportunity to really raise prices. And so we're going to see until the economy opens up again, and this will tie right back to all the stories you do on the vaccine. Until people are confident to go out again, we're still going to see prices held in check for quite some time. We should mention this, of course, is the consumer price index we're talking about today. The Fed looks at the PCE, which runs about 3 to 4 basis points lower than the CPI. So the Fed's going to need even more convincing.
Right. We'll hear from Richard Claret, I believe that's this afternoon. Michael McKee, thank you so much. It is time for a reset. We're doing this within the huge distractions of Washington. Of course, this agony of a pandemic. Michelle Meyer joins from Bank of America Securities, head of U.S. economics. Michelle, on your acclaimed spreadsheet, out to June, and dare I say out to the end of 2021, what numbers have you tweaked? What are you changing at the margin, given the outrage of this January?
Sure. So, hey, Tom. Hi, Lisa. Good to be with you this morning. You know, I think on the upside, certainly it's what you all have been very focused on, which is the news coming out of Washington around the prospects of additional stimulus. And the extent to which that is passed, quickly in the year, with additional quote unquote transfer payments, either through unemployment insurance or another round of checks or aid to state and local governments, that can provide a real big jolt to the economy in the spring. So that's certainly the upside story, and it's an important one. On the downside, we have to continue to pay attention to the virus. The virus cases are rising, restrictions are ongoing. We did see pretty clear moderation of growth at the end of 2020. So it's these offsetting factors, which I think are extremely important as we look past into the next few months.
I want to go back to your first acclaim, which is analysis of the American housing market. Is the housing boom right now only about the haves removed from this pandemic?
Yeah, so, I do think part of what's happened in the housing market reflects the quote-unquote K-shaped recovery. The fact that those folks that have been able to keep their jobs through this horrific time have done so with pretty stable wage growth and a lot of, unintentional savings as a result of restrictions and the inability to spend on certain services. And that clearly has led to greater investment in housing and housing-related items. Whereas those that, have had a harder time accessing the housing market, have been more inclined to be renters, have seen greater stress. So I do think that's part of the story. That said, there's been a broad, pickup in housing activity. It's not just the very high end of the market. You have seen some movement as well on the lower end of the housing market. And just look this morning, mortgage applications, nearly 17% increase week over week, purchase applications up 8% week over week. So, it looks like we're going to be maybe heading into that spring selling season with a bit more momentum as well for housing, given where we are with mortgage rates.
So, Michelle, when you talk about the K-shaped recovery and the haves and the have-nots, as Tom said very well, there's a question of how important the rally in asset prices, which really is a feature of the haves, is for the broader economy, for both the haves and the have-nots. How crucial is it that asset prices continue to go up or at least stay high for the economy to gain steam?
So that's one of the transmission mechanisms, I guess you may say, of monetary policy, is that by keeping interest rates extraordinarily low, they're, yes, lowering the cost of capital, making it easier to borrow, but they're also helping to inflate asset prices and build wealth. And that wealth ultimately should be spent to some extent and support the broad economy. So elevated asset prices, I would say, is, comes with easier financial conditions, which is one of the very important mechanisms by which monetary policy supports the economy.
Well, I guess the reason why I ask this is in light of the inflation data that we were just talking about, CPI, which rents and housing prices are a part of. There's this feeling that the inflation that we've seen, the money that's been printed, has gone almost entirely into the financial markets and hasn't been able to really trickle out into the real economy that much, just because so much of it's been shut down. How much is it important? I mean, what's the risk here that if we do get a disinflation or a deflation of asset prices, a sell-off, a bust, that could really disable the economy in a massive way?
So I would say there's yes, looking at asset prices is one important, channel, but also think about the money supply. That's more kind of the real economy, and that reflects the fiscal policies that have been put in place. And there's been a dramatic increase in the money supply. None of that, asset price inflation or the money supply gain, has yet to filter in to underlying inflation. But it can over time if it works to support higher economic growth and an increase in GDP growth, which ultimately leads to that broadening of labor market growth and prompts higher inflation. But that's not the story for today. We saw from today's CPI report, underlying measures of inflation are still extremely tame, given that we have this slack in the economy. And to your point, what if we have a big kind of sell-off in the market, or this kind of quote-unquote deflation in asset markets? I think it highly depends on, what that looks like. A short-term correction is fine from an economics perspective. Yes, you get a little bit of a hit to confidence, but the linkage to the economy is fairly limited. But a sustained one obviously would be problematic.
Michelle Meyer, Secretary Yellen will have to deal with what seem to be big fiscal packages. Does a marginal $100 billion matter? I mean, Ethan Harrison, you are wonderful at this. I mean, we talk about trillions and the drama of what we say, but do you nuance $100 billion here, $100 billion there?
Yeah. The support to the economy from fiscal stimulus right now, obviously it's been extreme, the dollars that have been pumped into the economy, but we would argue that it was necessary and probably will continue to be necessary. Ultimately, that leads to a higher deficit, which at some point down the road will be problematic, but I don't think it's an issue that policymakers are paying too much attention to right now. And I would think that sentiment will be continued at the Treasury and the Fed for the next few years until the economy has fully healed.
Thanks so much, Michelle. Greatly appreciate that as well. Lisa, I was talking about how I got so wrong a number of congressional districts in Arizona because my head's back with Barry Goldwater, 1964. I just looked up nominal GDP, the ever-growing current GDP of the United States. Lisa, I was only off by $3 trillion. I mean, when you do this every day, folks, you sort of get numbers from ages ago, and I was like 17 trillion. Nominal GDP in America is $21.2 trillion. Lisa, I didn't know that.
I love your idea of the nuance of $100 billion. When you throw out the trillions, billions, it talks about how abstract some of these figures are getting.
Yeah.
As we talk about some of the stimulus packages, and the size and scope of them really is unprecedented in a very real sense. The key question is, what is the longer term effect on that in inflation? And I really think that's one of the big debates of 2021. We really are not seeing it in the real economy just yet.
Yeah, I agree with that, and we'll see where we go. 1.12% yield flat here pretty much on the 10-year yield. Futures -7. But what's so important to me, Lisa, and folks, this is what we do on this simulcast. Lisa Bramowitz, Tom Keene, and John Farrow. Lisa, what's so important here is to get different opinions. And I am thunderstruck how Glenn Hubbard of Columbia is on the same page as Claudia Sahm of Washington and Michigan. I think that's fascinating.
Right now is the time to borrow and is the time to spend. And the consensus on that is overwhelming, Tom.
Well, we will see. We've got much more coming up. We've had a dearth here on Washington. We'll get back to Washington. This historic day, our Kevin Cirilli on the watch in Washington, along with all of our Bloomberg team. Coming up, Apple to the Moon, Ives of Wedbush. This is Bloomberg on radio and television.
With the First Word News, I'm Ritika Gupta. It's a historic day on Capitol Hill. The House will vote today whether to impeach President Trump for a second time. The vote comes a week after a mob of the president's supporters stormed Capitol Hill. Now, yesterday, the House voted to demand that Vice President Mike Pence use the 25th Amendment to remove the president from office. And that vote was largely symbolic. The vice president had already said that he wouldn't comply. President-elect Joe Biden will seek a deal with Republicans on another round of coronavirus relief. Bloomberg has learned that the approach could mean a smaller initial package that includes some priorities backed by Senate Republican leader Mitch McConnell. The goal is to avoid trying to ram through a bill without the Republican support. President-elect Biden has named former United Nations Ambassador Samantha Power to head the Agency for International Development. Biden also said he would make the post part of the National Security Council. That's a sign his administration will emphasize the role of development in maintaining security. Power is an immigrant from Ireland. European Union regulators have approved the London Stock Exchange's $27 billion takeover of Refinitiv. That was the last major hurdle to the creation of a financial data powerhouse. The deal gives the LSE global scale as firms compete for the surging demand in data and analytics. Bloomberg LP, the parent company of Bloomberg News, competes with Thomson Reuters and Refinitiv in providing news, data, and information to the financial industry. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We can't have the companies generate these riches and then say to society, oh, there were some unfortunate side effects. We had all the benefits. The rest of the world had all the negative side effects. The companies themselves have to capitalize for those negative outcomes. It is doable.
That is Marty Chavez, a former head of global securities at Goldman Sachs, talking about regulating big tech and that becoming a big risk and potential necessity in the years ahead. Coming up on the Open, Bob Michael, JP Morgan Investment Management Chief Investment Officer, joining us to drive forward the conversation, Tom, as we look at this confluence of drama in Washington, D.C. and the steadiness, the consistency of the tone in markets. Yeah, there have been a couple of ripples, but for the most part, we've got the same story going on. Wall of cash and people leading into risk, Tom.
It's going to be interesting, and then we move on to the impeachment ceremonies. I'm told scheduled to begin in the vicinity of 9 o'clock. Right now, folks, this is the most important conversation of the day on the mental foundation of the market. And let's not mince words. It's founded on one stock. We speak to Daniel Ives on what was wrought in Cupertino. He is with Wedbush. Dan Ives, you've lofted up to $160 a share on Apple, and I want you to talk about your core belief that they will innovate. And Dan Ives, I want to go to the latest incarnation, the M1 chip. And folks, I'm not, because of time, I'm not going to go into this. The M1 chip is getting rave reviews in the technology zeitgeist. Dan Ives, how do they do that?
Cupertino, that's where the magic happens. And if you look at what they've done from an innovation, I think M1's a good example. That's a shot across the bow at Intel and the semiconductor industry in terms of Apple controlling more and more of their ecosystem. And I think what you've seen in the stock and you're seeing in innovation really across the whole food chain, Apple's continuing to flex their muscles and expand it more and more, especially with the super cycle now a reality playing out.
But the great miscall of the Apple Gloom crew, Dan Ives, has been the innovation's going to end. And the fact is the M1, it appears, I'm speaking as an amateur, looks like a ball over the wall, over the turnpike, over the cask and flagon as well. Dan Ives, that's Red Sox talk, in case you didn't know it. The bottom line is, Dan, is what is in the pixie dust that gives you confidence that they can continue to innovate?
Well, take a step back, it's a golden install base, the best consumer products company in the world. That penetration, we've seen it with AirPods. We think AirPods over 90 million units this year. You're seeing with the M1 chip. And then ultimately, in the next few years, we see them partnering on EV with the likes of a Volkswagen, a Hyundai, potentially a Tesla. It just speaks to why our opinion a year from now, we're looking at a $3 trillion stock for Apple as this all plays out. Remember, the haters will hate, but they continue to innovate. And I think we even will see over the next month as they continue to execute China. That continues to be the linchpin of the growth.
You guys have no idea when the haters hate what it means for Dan Ives, the garbage he gets from people anti-Apple is well. As you model out 160 target, and then you extrapolate out, I mean, 3 trillion is unimaginable to those at 2 trillion or way back at 1 trillion as well. What do your linear functions look out 5 years, 10 years out for Cupertino?
Yeah, first, the services business, I think, over the next 3 to 4 years, that could be worth upwards of $2 trillion. That services piece alone, which if you look at that trajectory, that continues to be a big part of the re-rating. Then you look at the golden iPhone hardware ecosystem. I think that could be worth, upwards down the road, another $2 trillion to $3 trillion. That's why, look, this is a company right now still in the middle innings of a renaissance of growth And the super cycle, that continues to be in fifth gear as we're seeing play out.
What is the impact? I mean, you mentioned the iPhone, and folks, full disclosure, another white bag went through the damn door yesterday at home. I mean, somebody in the house is buying another piece of Apple to keep Dan Ives Live going. But Dan, what happens if they redo and innovate iMac or other products? I mean, is that in your Excel spreadsheet?
I think that's all incremental. And ultimately, if you look, especially what we see with M1 chip and some of the other innovation happening in the halls of Cupertino, you further monetize that. That just adds to the overall ecosystem for Apple. And that's why right now this is just further monetization of that install base.
Do you agree they should do an automobile? I mean, why should they do an automobile? If it ain't broke, don't fix the model.
Well, for EVs, we're talking about $1 trillion market. They're not going to be making the automobiles themselves. We believe they partner. We talk about VW, Hyundai, Tesla, potentially Daimler. That's the opportunity. You can't have the biggest consumer products company looking at EV from the outside looking in. It's very similar to what we're seeing with Baidu in China. A golden age for EVs. Apple's going to dive into the deep end of the pool.
Dan Ives, you play by the rules as a securities analyst. After the joy, you've got that paragraph, special risks. What's the risk for Mr. Cook?
The risk for Cook, it's China and the U.S., that cold tech war. They are the poster child. If you don't see a ratcheting down with Biden administration, that would be a risk to Apple, both supply chain as well as demand. And, of course, regulatory. I mean, that's going to continue to be a big tech versus Beltway battle.
Just real quick here, Dan Ives, then if we get troubles with China, what does that do as a percent basis on free cash flow growth or revenue growth? How do you quantify that effect of trouble with China?
20% of iPhone demands China, and you start to play with the math there. You could start to see anywhere from 3 to 5% downside to bull case numbers, and of course supply chain. Remember, they bet the horse in terms of Foxconn, so that supply chain disruptions. That's why Apple is so key, and they're the poster child for U.S.-China cold tech war.
What are we going to see when they report? I mean, they come out of the holiday season absolutely unique. I mean, the pandemic's made it original. What's your guesstimate of that earnings call?
Oh, I mean, I think this is going to be a blockbuster, a Devontae Smith type quarter. And I think you're going to see more and more numbers continue to move up. And that's when the street's continuing to underestimate, in my opinion.
Dan Ives, I'm going to leave it there because I've got a reset for an impeachment. Daniel Ives with some terrific work from Wedbush, this on Apple Computer. The target is 160. I haven't looked at the A&R screen, but I think he's really up there, top of the market. I want to look forward, and folks, this really goes back to the heritage of Bloomberg on the economy and Bloomberg surveillance. I got a phone call a zillion years ago, I'm going to say 7, 8 years ago, from the good people at the World Economic Forum, and they said, we want you to do a seminar on financial innovation. And I basically said no, and they said, no, okay, we really want you to do this, and some muckety-mucks were going to show up. So I said, okay. It's the best seminar I've ever done at Davos. The people way out front on innovation of technology. We see that again today. I can't say enough. You know that I don't care about all these IPOs, and I make jokes with Dave Wilson about SPACs and that. Guess what? This Affirm deal really needs to be watched for all that it is for Mr. Levchin and the others. Affirm goes public with a huge up off the red herring, a huge up off the IPO, and we'll see where it opens. Ms. Chang, a conversation tonight with Max Levchin, Bloomberg Technology. Please stay with us. This historic day for Washington on Bloomberg Radio and Bloomberg Television. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
For our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow. The countdown to the open starts right now. We begin with the big issue, another historic day in Washington. House Democrats preparing a vote to make Donald Trump the first ever president to be impeached twice. Speaker Nancy Pelosi calling on Republicans to join in the effort, accusing the president of inciting the deadly insurrection at the Capitol.
The facts are very clear. The president called for this seditious attack. I urge my Republican colleagues to open their eyes and to finally hold this president accountable.
A number of Republicans joining with Democrats saying that they support the Democratic resolution, including Wyoming President Liz Cheney, the third-ranking House Republican, pinning the chaos in Capitol Hill squarely on the president, saying he, quote, summoned the mob, assembled the mob, and lit the flame of this attack. Everything that followed was his doing. President Trump, however, staying the course, defending his remarks leading up to the riot while trying to distance himself from the mayhem.
We believe in respecting America's history and traditions, not tearing them down. We believe in the rule of law, not in violence or rioting.
Joining me now with the latest from Washington, D.C. is Bloomberg's Kevin Cirilli. Kevin, looking at the Republican support for this impeachment proceeding, do you have a sense of what the chances are that it actually will go through?
It's likely going to go through, and I think when you look at the timetable, expect that vote anywhere between 2:30 p.m. New York time and 7 p.m. New York time as well. I think the bigger question once that happens, Lisa, is where does this go with Senate Majority Leader Mitch McConnell? The Senate's not scheduled to reconvene until Tuesday, and a lot of questions about where senators are on this beyond the likes of people like Murkowski, Collins, and Romney. And one more point, Liz Cheney, who, of course, the third highest ranking Republican official in the House caucus, to come out with such a brazen statement against President Trump, the response to that has been just completely unprecedented. Some Republican strategists saying this was absolutely the right call. You have other elected officials on the far right of the party saying that she needs to step aside. I'm struck by another name on that list who have come out in order to vote to impeach, and that's Congressman Adam Kinzinger. Adam Kinzinger is a Republican from a suburban district in Illinois. He is often thought of as an individual who could have longer-term ambitions within the Republican Party, but Congressman Adam Kinzinger and his experience in the military very much laying down an opening bid of sorts to take the Republican Party in a new direction.
And Mitch McConnell also reportedly backing impeachment. Has it become politically expedient for Republicans to back getting Trump out of office? Is it a way to remove him as party head and be able to move forward?
So for the Republicans who believe that they feel that they don't want to have President Trump run again in 2024, yes, they feel that there is a path to do that through conviction of impeachment. For Republicans who feel that the president and the Trump conservatism brand still has some type of sway within the far right of the party. They feel that this is only going to alienate a base that they need in order to continue on for elections. The bottom line is that from an investigative standpoint, we would be fools, anyone, to suggest that the impeachment process is the end of the line for the events of what happened now 1 week ago from today. There are going to be court cases. There are going to be investigations. There will be Capitol Hill hearings. People will be called to testify. And the narrative and the evidence of how the planning that went into this, that extends beyond the occupant of the Oval Office, that will become increasingly important over the next months of this year.
Kevin Cirilli, thank you so much. And of course, it isn't quite over yet because we still have to get to the inauguration with a number of threats highlighted by the FBI. Meantime, markets not caring too much. BTIG's Julian Emanuel expecting volatile range-bound moves in the market leading up to the inauguration, writing, quote, the equity market's ability to rally decisively in the face of tragic events at the Capitol, the virus's escalation, a poor employment report, and rising yields confirms that a new, more speculative, more volatile phase of the bull market has begun. Julian joining us now with more. What does it mean to have a more speculative, more volatile aspect of the bull market, Julian?
Well, in the here and now, Lisa, what it means is that at these valuations, the reason that the market hasn't backed off is because there are two things out there that are really underpinning prices here. Number one, the expectation that there's going to be greater fiscal stimulus than perhaps was thought certainly before the Georgia runoffs. And number two, this level of public participation, which we saw really just begin at last summer and accelerate, obviously, post the election. It's still very, very firm, but we really haven't had a point where the public's faith has been tested. And so that, to us, could well mean that events, perhaps earnings disappointments, lead to this greater period of volatility, albeit with the uptrend remaining intact.
All right, level of public participation. You talking about Robinhood here?
We're talking about Robinhood. We're talking about every online broker. Frankly, as an options professional, there is no guidepost to evaluate the level of influence that short-term options trading, short-term call buying has had on markets, only to say that when we look at the last several months, it's very clear that this kind of public participation has really been the incremental price setter in markets.
This is actually a huge point, Julian, the incremental price setter at a time when on Monday, according to one statistic, a handful of penny stocks accounted for about 20% of all trading in the U.S. equity markets. Going forward, do you think that this creates speculative froth that will create speculative busts, or do you think that it will just continue to melt up that brings forward some of the price expansion that people are expecting down the line anyway?
Well, for the meantime, what it means is you're going to likely have more of these periods where there will be a shadow of doubt coming into the public's mind. But by and large, interest rates where they are and the experience of this last 6 months on the part of the public, and the fact that the public has largely followed momentum, shifted around, and is still enjoying profits, likely leads to an environment where if we do get the kind of earnings growth that we're looking at north of 20%, and we get an economy that continues to reopen as the vaccine gets into everyone's arms, that you could actually have a speculative overshoot.
So can we just dig in a little bit more to the Robinhood trader? The cliche is people get their stimulus checks. They don't have anything to do. Everyone's bored out of their minds. We're in a pandemic, and they take that money and they sign up and they basically are gambling because why the heck not? What else are you going to do? You can't watch sports that a lot of them are shut down. Is that cliche accurate? And is this interest going to dry up when people have more to do?
It's a bit deeper than that. Basically, if you look at it, coming into the pandemic, the younger generation, millennials, Gen Z, essentially have been underinvested for most of their sort of investment horizons, which granted for some are small, set against this idea of interest rates at historic lows and negative real yields. It's forcing the asset allocation decision away from bonds into equities. We think that has longer legs, but there's no question about the fact that weekly call options are, really part of a lure that when we get further along in the year and people can get away from their screens and get out and actually do things, that might be a headwind for equities.
In the meantime, you were talking about how this is going to be a more volatile period of the bull market, and you talk about potentially there being some 10 to 15% pullbacks, albeit relatively shortly lived, in the market. What do you see as the likely catalysts for that type of downturn at a time when everyone wants to buy the dip?
Well, I mean, we already know what we're facing this morning, whether it's political uncertainty, obviously the virus has been proliferating, or just, some sort of something that, and normally catalysts are things that we don't necessarily anticipate, but something that at least temporarily shakes the investing public's confidence or suppresses the narrative to a certain extent that we are going to get the type of fiscal stimulus that President-elect Biden is likely to propose tomorrow.
Julian, I don't want to leave without discussing Bitcoin, because you have been tracking it and your institutional clients are very interested in it. We've seen a pretty big deflation after the massive run up to record highs of more than $40,000 of Bitcoin. What is it in terms of the importance of Bitcoin? Why is it important for you to watch it every morning as a market indicator?
Well, Bitcoin to us is really sort of the leading edge of what the investment thesis of 2021 is all about. So if you think about it, the entire globe went into the pandemic together and is coming out of the pandemic together. And that kind of globally synchronized growth we haven't seen since the 2003 to 06 period, a period where asset diversification really won out over sort of FANG being the only game in town. And Bitcoin, aside from, the ideas of, excessive monetary stimulus, Fed balance sheet expansion, potentially debasing the dollar further, Bitcoin is that manifestation, particularly of the younger generation, seeking returns through diversified assets.
Julian Emanuel, thank you so much, as always, incredibly insightful. Right now, let's shift to Bloomberg's Kaylee Lyons joining us with a look at the stocks moving ahead of the opening bell. Kaylee.
Well, Lisa, I actually want to begin with some breaking news on Intel. According to CNBC reporting, the CEO of VMware, Pat Gelsinger, will become the company's new CEO, replacing the current CEO, Bob Swan, who will step down effective February 15th. Again, this is according to CNBC. They cited people familiar with the matter, but Intel shares getting a big boost off of this in pre-market trading, up around 12%. VMware, for its part, down around 5%. So we will stay on top, of course, that breaking news. Meanwhile, let's check on the shares of GM, because it did close at a record high after the bell, or at the bell yesterday, and before the bell this morning, it is higher by another 4.5%. This all on the announcement of electric delivery vans. FedEx will be a customer, and that's resulting in an upgrade at Nomura and a higher price target over at Barclays. You also have KB Homes rallying early this morning, up about 5.5%. Orders were up 42% in the quarterly results after the bell yesterday. Earnings came in 20% above estimates. That all resulting in a nice move for the stock this morning. Not as positive a story for two retailers, though. Urban Outfitters down more than 7%. Fourth quarter margins are going to shrink more than expected. Plus, the holiday quarter, not great. November and December sales fell 9%. Plus, the CEO of its namesake brand is leaving. That stock is lower, as is Big Lots by about the same amount, around 7.8%. Its latest fourth quarter forecast came up short as well, Lisa.
Kaylee Lyons, thank you so much. Coming up, U.S. inflation remaining well below the Fed's target, reflecting an economy still grappling for momentum. That conversation coming up next with J.P. Morgan's Bob Michael. This is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think people may be missing is that, it's not guaranteed. It's not a given that inflation will really take off, because it's not a given that fiscal policy will stay expansionary for several years to come. And we think there are upside risks to inflation, but at the same time, there is also still a lingering deflation risk.
PIMCO's Joachim Fels giving us his outlook on U.S. inflation remaining fairly muted in the final month of 2020, with slack in the labor market and muted demand keeping inflation pressures tame. Michael McKee, Bloomberg Chief Economic Policy Correspondent, joining us now. Mike.
Well, Lisa, the question is there really a debate at the Fed about tapering? The market seems to think so. They pushed up interest rates after a couple of Fed officials said if the economy is really strong, we would consider talking about it. What does talking about it mean? Well, we're getting pushback from other members of the Fed. Yesterday, Jim Bullard, the president of the St. Louis Fed, saying we want to get through the pandemic and sort of see where the dust settles before we talk about this. Eric Rosengren from Boston, I expect it to be a little while before we're even talking about tapering. And I put that third one on there. That was Monday. Raphael Bostic, everybody pointed to him as the guy who kicked off the talking about tapering, but he also said, I don't see that happening in 2021. Now, we do know that we are going to see inflation rise because of base effects. You take a look at what happened last year at this time. We had deflation in April, May, and June when we saw the economy shut down by the pandemic. The blue line there is where we are now. So coming up, those will fall out of the calculation and we will see inflation rise. But the Fed is going to expect that to fall back because, as you can see, later in the year, inflation rose again. And the important thing to keep in mind here is the statement the Fed made in its last FOMC, after its last FOMC meeting. The Federal Reserve will continue to increase its holdings of Treasury securities by at least $80 billion a month and of agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made toward the committee's maximum employment and price stability goals. So we're going to have to see inflation rise a lot. And remember, we're still down by 9.3 million jobs. There's a long way to go until the Fed even starts considering it. We will get some additional information on this whole thing this afternoon. Richard Clarida, the vice chair of the Fed, talks about their new framework. He will probably address this issue. And then, of course, tomorrow, Jay Powell, the Fed chairman, speaks for the first time this year. We'll get his views as well. Jobless claims tomorrow. Retail sales. Are consumers coming back, or are they going to start spending their checks, or are they going to hold on to those? We'll get some more information on that. And PPI, another price index, we'll see how that turns out, Lisa. But at this point, I think you've got to figure the Fed isn't going to be tapering this year.
Not going to be thinking about it. Michael McKee, thank you so much. JP Morgan's Bob Michael saying central banks are controlling government bond yields, writing, quote, the Fed has permitted the doubling in 10-year Treasury yields from 0.6 to 1.2%. The Fed will probably stabilize yields here, but we expect the 10-year yield to be between 1.5% to 2% during the second half of the year. Bob joining us now. Let's stick with inflation. This has been the big debate. We were talking about that with Joachim Fels of PIMCO yesterday. What's your view on the most likely scenario with inflation for the rest of this year, but also leading to the years ahead, as that is really the future expectation that drives a lot of markets?
Yeah. Hello, Lisa. And let me say, I'm looking forward to a more intelligent conversation than I usually have in this hour slot.
Ooh, shade. Let me tell you, it's always fabulous with John, but please continue with inflation.
I think this year is going to be a real challenge for the Fed. Mike's right, the base effects are going to be there. So you're going to start looking at inflation with just the current run rate posting close to 2.5%. We see 5 big drivers of growth this year. First of all, You've got the vaccine. That will lead to a gradual reopening. Well, we haven't had that for a year, so we don't even know what a normal economy looks like. You've got tremendous monetary accommodation. You have that $900 billion stimulus bill out of Congress. You now have a blue wave that controls 2 budget reconciliation processes. Let's see what kind of stimulus comes out of that. And finally, whether it's intended or unintended, the Fed has become an enabler of modern monetary theory. So as long as they're buying the amounts of government debt that they are, they're allowing the government to issue trillions and trillions with little penalty in the market. So I see this driving growth up to a level that when we look back on 2021, we'll get pretty close to where GDP was back in 1984, and that was 7.3%. I don't know that we'll get there, but it's very likely we could post a 6 handle. So you take all of that growth, you take the base effects, you take the supply shock that still exists, and we can see some measures of inflation approaching 3%. I think that's a big challenge for the Fed. Sure, when you get down the road, we'll have to see how the economy has recovered, what the normal looks like going forward, how much has the output gap closed. Those are big issues, but a growth rate of around 6% or higher closes that output gap pretty quickly.
Bob, there was a lot there. Let's unpack a little bit of it. The Fed as an enabler of modern monetary theory, this idea that it's going to allow the U.S. to borrow indefinitely and suppress borrowing costs by simply buying it up. Why are we not seeing more inflation if that is what they are doing?
Well, maybe we are. Maybe we would be in a disinflationary environment. So I think you have to step back and say, they're doing the right thing, that the economy has been shut down by official policy. Because of that, you've had to issue trillions of dollars of debt and likely another trillion or so more to bridge the gap from a shutdown economy to one that is reopened and operating on its own. You can't simply expect the markets to absorb all of that without any penalty. So you need the central bank to step in and help with that. When I look at the inflation data today, I look at 1.6% core inflation. That looks okay for me, particularly for an economy that's still shut down. I think the bigger question is, when you step back and look at the aggregate amount of money that's leaked into the markets from global central bankies, it certainly inflated asset prices. So that's something the new administration, I think, is going to have to deal with. This thought that who are the owners of assets, because they've certainly benefited a lot.
In the meantime, you said that you are embracing, not fighting the reflation trade because of the amount of power from fiscal and monetary sources. At what point do you determine, or can you determine, when the reflation trade has gone too far?
Well, I think it's a number of things. And first of all, if I go back to Bostic, he's right. The Fed should be allowed to have a conversation this year on whether the amount of large-scale asset purchases they're doing, that $120 billion a month, is too high. If we go back to the financial crisis, the peak was $85 billion a month. So this is about 50% more. It made sense last year. Will it still make sense the middle of this year? I'm looking at 10-year yields. When real yields start to get too far above zero on a real yield basis, to me, that's saying that the reflation trade's going a bit too far.
Bob Michael, fantastic to speak with you as always. Thank you so much. Do want to just give you some quick breaking news. VMware Chief Executive Officer Pat Gelsinger is leaving to go off and join Intel. If you look at VMware shares, they are down 5.7% in pre-market trading. You can see Intel shares popping 11%. Coming up, the analyst action you need to know. That's next in our morning calls. This is Bloomberg.
Такие компьютеры открывают новые возможности детям с двигательными ограничениями, которые закованы в своем теле и еще и не могут разговаривать. Да? Они не могут никому объяснить, что они хотят. Да? А тут получается, что компьютер дает им эти возможности, а компьютер озвучивает то, что хочет ребенок.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Jefferies upgrading Visa to a buy with a $250 price target. The analyst expecting shares to outperform, vaccines fueling upside in high-quality recovery names. Next up, MKM upgrading Twitter to a buy with a $60 price target. The analyst citing several catalysts, including improving fundamentals and increasingly attractive risk profile. And finally, for the first time in 7 years, JP Morgan turning bullish on ExxonMobil. The analyst upgrading shares to overweight, saying the company may finally be turning the corner. Coming up, short sellers quietly rotating into some of the 2020's top performers. That conversation coming up next with BlackRock's Kate Moore. In the markets, you could see a little bit of a downturn ahead of the open here with about 5 minutes to go. This is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually allow to work for a large firm such as Boeing with such technologies that we can see the outcome.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Markets, the Open, taking a look here ahead of the U.S. Open to equities, that there is a bit of a churn under the hood here. You've got really fluctuating between gains and losses. Not so interesting, taking a pause, but really we're seeing dollar strength reassert itself. In contrast to some of the weaker calls, we're also seeing yields lower after a very successful 10-year auction yesterday. People rethinking how high yields could potentially go. Crude taking a breather after reaching the highest levels since February, with mobility starting to increase and output cuts starting to take hold. Right now, let's head over to the markets desk. Bloomberg's Kaylee Lyons joining us now. Kaylee.
Well, Lisa, I want to come back to the breaking news we got earlier this hour. Intel's getting a new CEO, the company replacing current CEO Bob Swan with VMware CEO Pat Gelsinger. That will be effective as of February 15th. A huge lift for Intel at the open off the back of that, up more than 11%. VMware, for its part, though, of course, losing its CEO, is down 5%. Our own analysts here at Bloomberg Intelligence say the loss of Gelsinger could hurt VMware's future growth prospects. So keeping an eye on those two stocks. Elsewhere in tech, Twitter actually higher today, even though it is still caught up in the political mire, but an upgrade over at MKM Partners and a price target raise is helping. The analyst there sees improving fundamentals and a reversal of negative sentiment. I also mentioned GM earlier in the hour, but checking on it at the opening bell, up another 4%, a fresh record after it closed at a record yesterday. It's all about those new EV delivery vans. Now, also we have some earnings movers this morning, Lisa, a number of them sharply to the downside. Grubhub falling more than 5%. The fourth quarter sales were up 57%. You can thank the stay-at-home world for that, but margin dropped. High spending is expected to hurt margins for the fiscal year 2021 as well. Party City's fourth quarter, not great. That stock down more than 6%. It came up short on revenue by about $37 million. Brand sales also are going to decline by mid-single digits. Big Lots down in a big way, down about 7%. Similar story here, the latest fourth quarter update. Missed on EPS by a wide margin. And finally, Urban Outfitters sinking about 6.5%. Holiday season sales down 9%. Margins also fell, plus the CEO of its namesake brand is leaving. All of that adds up to a decent decline at the open for Urban Outfitters, Lisa.
Kaylee, thank you so much. And just to give you a little bit more detail around the VMware departure of Pat Gelsinger, Anurag Rana of Bloomberg Intelligence talking about how this is a very big deal because Gelsinger is supposedly a visionary in the tech world, that this could potentially hit VMware's potential growth. Meanwhile, value stocks following the 2021 playbook staging a comeback on the back of recovery hopes despite decades-long underperformance versus growth stocks. Oaktree's Howard Marks weighing in yesterday, applying the tenets of value investing to growth names. Let's take a listen.
There's no disputing the fact that growth stocks have outperformed value stocks. On the other hand, I think there's no disputing the fact that what are called growth stocks have a better future than what are called value stocks. The great tech leaders that have been in the S&P for the last 10 years have probably been the acknowledged winners. These are companies that have gotten better and better, that improve as they get larger.
For more, let's bring in Bloomberg's Sarah Ponczek. Sarah.
This rotation to value really began late last year after the presidential election, after positive vaccine efficacy news, and it's just continued in 2021. If you look at the raw market numbers after the Georgia runoff, expectations for more fiscal stimulus. If you look at S&P 500 value versus growth, how we have seen these areas of the market perform over the past 3 months. Value has really taken the lead. Last quarter was the best quarter for S&P value versus growth since 2016. This month already, S&P value is on pace for its best relative month versus growth in over a year. And this is also, of course, filtered into the small cap trade. Last quarter, best quarter on record for the Russell 2000. Well, we already see the Russell 2000 moving higher in 2021, yesterday closing at a record. But still, though, your large cap stocks, the S&P 500, up a very healthy 8% over the last 3 months. We haven't seen this really detract too much from large cap stocks either. But as Howard Marks really did bring up, the big question is this time different? Are we going to see a sustained shift to value stocks? Or is this going to be a very short catch-up trade? And eventually, will we see these mega cap growth stocks just resume once again, big tech moving into the future? Now, If you look right here, a long-term chart of Russell 1000 value versus Russell 1000 growth, as you can see, we've really seen growth outperform for a very, very long time. Towards the right-hand side of the screen, you can see that value uptick, but it still doesn't register too much. To give you a sense of these numbers, Russell 1000 value over the past decade, total return of 175%. For growth, it's 377%. That converts to an annualized return for value, long value, this would be, of 10.6%. For growth, though, it's about 17%. So how did this convert, though, on a sector scale? If we look a little bit more micro, well, your best performing sectors so far in 2021 are those that also took off in late 2020. Energy, materials, financials, your best performing sectors so far this year. Yesterday, we had materials and financials both close at a record, Lisa.
Sarah Ponczak, thank you so much for that. Meanwhile, BlackRock's Kate Moore expecting growth to remain crowded, anticipating investor reluctance to rotate away from pandemic winners. She writes the following: we are positioned for a gradual improvement in economic reopening, but are not bottom fishing cheap stocks within the value bucket without a quality consideration. Structural winners with strong technology platforms continue to deserve their premium valuations, remain a core part of our portfolio. Kate joining us now. Kate, it seems as if you are agreeing with Howard Marks that basically when stocks are discounted, there may be a reason. Do you think that there is the potential for value to catch up here, or do you think that that's been overplayed?
Yeah, hi Lisa, it's good to be here today. Look, I largely agree with Howard Marks that many of these technology companies, and I would say even companies in a variety of different industries with excellent technology platforms, have very deep moats around them at this point. These are companies that are generating free cash flow, that have strong visibility into future growth. These are not just plays on potential. This is an actual realization of growth. So it's hard not to want to own some of these high quality companies that fall into the growth bucket, despite the fact that they're trading at what some would call premium valuations. But your question was around whether or not we're going to get a wholesale rotation into value. And I think, we've had 7 full trading days so far in 2021. There's a lot of desire to think about, new positions. Can leadership really continue from 2020 onwards? But I have to say, within the value bucket, there are only a couple areas that look like they might have a little bit of legs. And a lot of that's dependent on an acceleration, particularly an acceleration in the improvement in growth in the U.S. and the global economy. Look, banks are a great example. We mentioned rates a little bit earlier on the program, and that's obviously having a big impact on the expectations for bank earnings. You've seen a rebound in energy and materials, resources more broadly, as there's expectation of additional infrastructure spend. So there's some reasons to like some of these areas that have been trading at cheaper multiples than the rest of the market based on an economic recovery or a modest change in the rate environment. But as I said in that note, I don't think we go bottom fishing into the lowest quality stocks at this point just because they were laggards.
I want to talk a little bit about idiosyncratic risk. I'm looking right now at VMware shares, which are lower by more than 5% after the news that their CEO, Pat Gelsinger, is going to leave and go to Intel. Intel shares surging about 10%. Given how high valuations are on some of these retail darlings, the big tech names, how much is it imperative that these idiosyncratic features, whether it's regulation on the downside or whether it's leadership of some of the star executives on the upside, to determining which are the outperformers?
Yeah, Lisa, this is a good question because I think 2021 is going to be a tougher year in terms of generating alpha for most active managers. And picking the right companies in the fast rivers is going to be incredibly important. Certainly some of the things that you're mentioning in terms of personnel risk are on the table, but also policy and regulatory risk are considerations we have to have. And I also think thinking about a company's ability to weather a slightly higher inflation environment is going to be critical. Does the company have the ability to control their costs and maintain their margins? Do they have pricing power in order to pass on any higher costs to their consumer and to their end user? Or are they price takers? So I think really digging deep into the guts of each of these companies and to these industries is going to be critical for generating strong returns in 2021. It's not going to be just a buy the market and be happy with your double-digit returns again.
When you talk about the rotation trade, we're not just talking about sectors within the U.S., but also out of the United States and into emerging markets in Europe. How much do you think that has gone too far or not far enough?
Look, I'm much more constructive on investing in EM Asia than wholesale buying Europe and Japan, where I do think you need to be more of a stock picker. There's a very wide spread between, high quality companies with strong business models and large potential growth in their earnings in, say, Europe, and those that are more structurally impaired. So I like to choose individual securities and industries in those regions. In EM Asia, though, I'm seeing sort of a broadening of growth, and there I feel quite constructive. Some have pointed to policy in China kind of backing off its ultra-accommodative stance, but that's largely because the economy has started to get back on track. So I feel quite constructive on both the consumer and the export side in China and the rest of EM Asia. And I think there's a lot of room for investors, both institutional and retail, to increase their allocation there.
Thank you so much. Kate Moore, always appreciate your insights. Let's head back to the markets desk now with Bloomberg's Kaylee Lyons. Bloomberg, Kaylee.
Well, Lisa, I want to talk about some stocks moving on the back of analyst action, beginning with ExxonMobil, actually upgraded over at JP Morgan to a buy rating. That's the first time in 7 years. That is how long JP Morgan sat at neutral on the stock. The analyst is citing cost reductions, transparency that may aid the company in posting more consistent results. It's up just over 1% on that. Home Depot also getting an upgrade today. Guggenheim raising it to a buy with a $310 price target. It's sitting right around $279 a share right now. The analyst saying the housing background should serve as a strong tailwind. MasterCard also receiving an upgrade, this one from Jefferies. The analyst calling the company as well as Visa high-quality recovery plays, thanks in part to the vaccine helping out with the cross-border economy. It's up by about 1.4%, but analysts not feeling so positive when it comes to DuPont. Both HSBC and Vertical Research cutting the stock to hold. It's down by about 1.6% this morning, Lisa.
Kaylee, thank you so much. Coming up, a boon for financials. Investors expecting higher rates to provide further upside for the big banks. We'll get that view from Dan Suzuki of RB Advisors up next. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not